Yes, people. Oh, very, very happy to all of you. So, guys, we're doing this chapter called as preparation of the financial statement for companies. In last class, we have discussed illustration 5 and illustration 7. So today we'll be heading forward to illustration number 8. So we had in between almost 10 days of, probably more than that, a gap where you got result. We had some happy moments. Then yesterday we had award ceremony. Yesterday only, no? No, day before yesterday. Yes. Right? So again, we are resuming back with this chapter. So let's continue, people. The page number of this is 11.54. It says that from the following particulars furnished by Alpha Limited, prepare the balance sheet as on 31st March 2001 as required by Part 1, Schedule 3 of Companies Act 2013. Yes, please tell me the format of the financial statement is laid down where in Companies Act 2013? In Schedule 3. Schedule 3. I asked financial statement. Schedule 3. Schedule 3 Part 1 gives me what format? Format of the balance sheet. Part 2 gives me the format of statement of P&L. Okay. All of you know the format? Liability side. How many broad classification? 4 broad classification. Who said 3? 4 broad classification. One is shareholders funds. Then share application money pending allotment. Non-current liabilities, current liabilities. Wonderful. 4 broad categories. Okay. Asset side, 2 broad categories. Non-current asset and current asset. Okay. Under shareholders funds, how many sub-classification? 3. First one is share capital. Second is reserves and surplus. Third, money received against share warrant. Okay. Under non-current liability, first one, long-term borrowing. Second one, deferred tax liability net. Other long-term liabilities. It's not other non-current liabilities. It is other long-term liabilities. Fourth, long-term provision. Are we allowed to change the order of the non-current liabilities? No. Next, coming to current liability. First one, short-term borrowing. Long-term borrowing means short-term borrowing here. Short-term borrowing. Next, trade payable. Instead of deferred tax, it is trade payable. Third, other current liabilities. Other current liabilities. There it is other non-current liabilities. Here this, sorry, that is other long-term liabilities. Here it is other current liabilities. Then short-term provision. Short-term provision. Any problem? No problem. Coming to asset side. First item is property, plant, equipment and intangible assets. Under that, what do we have? Property, plant, equipment, intangible asset, capital work in progress, intangible assets under development. Okay. First is property, plant, equipment and intangible assets. Next, non-current investments. Wonderful. Next, deferred tax asset net. Then long-term loans and advances. Very good. Then other non-current assets. Wonderful. Super. Now you're coming in form. Coming into current assets. First one, current investment. Okay. Next, inventories or trade receivable? Inventories. Okay. Next, trade receivable. Cash and cash equivalent. Then short-term loans and advances. Last one, other current assets. Wonderful. So now they've given the details. We have particulars column, debit and credit column, and we have the total of debit and credit. So this is a trial balance. Wonderful. And they are asking you to prepare the balance sheet. Look at the language. They want you to prepare the balance sheet. They didn't ask you to prepare the entire financial statement. So what do you think? P&L is prepared or not prepared? P&L prepared or not prepared? Now for that, I'll come and check the trial balance. In the trial balance, if you have the item of revenue from operation, other income and all the other expenses you have, in that case, P&L is not yet prepared. Now, do you find any items of income and expenses, gain and losses? In the trial balance, do you find any income, expenses and gain and losses? No, which means this is not the final trial balance. Before that, there was a pakka full-fledged trial balance where we had all the income items, gain items, expense items, loss items, asset, liability, capital, all the items we had. From the trial balance, they prepared the profit and loss account. So from the trial balance, we transferred all the income and expense nature item to the P&L account. P&L account by passing closing entry. And the P&L was prepared. And finally, what is the profit of that statement of P&L? That profit is shown here in the trial balance, which means we had a full-fledged trial balance. We had a full-fledged trial balance. After this, we prepared statement of P&L, and then we were left with the remaining part of the trial balance, which is having asset, liability, capital, and the balance of statement of P&L. From this, we are supposed to prepare now balance sheet. Are you able to follow? So this P&L balance which is given here is not the opening balance. So imagine in the full-fledged trial balance, if you find P&L balance inside, what does it mean? It is the opening balance of the surplus, accumulated surplus of all the previous years. But when you have the P&L balance in the trial balance of current year, which is coming after preparing the statement of P&L, then this P&L is not the balance of the previous year. It is accumulation till date. Or this is the P&L of, yes, current year. So from here, what are you supposed to do? Transfer all the items to balance sheet under asset and liability category, and you'll be done with your balance sheet. So coming back, equity share capital, face value of rupees 100 each, 50 lakh they're telling. So how many number of shares? Say 50 lakh divided by 100, 50,000 quantities of shares. Okay. So where will this go to? Equity share capital under shareholders funds. Okay. Calls in arrear, 5,000 is given in debit column. What are we supposed to do? Calls in arrear means what? I've made the call. I'm asking the shareholder to pay the money, but he's not given the money. So I will receive this in future. Anything that I receive in future is asset. Asset will have what balance? Debit balance. So it is coming in debit column. But Schedule 3 says that recording this in the asset side does not make sense. Recording this will not make sense on the asset side. So from the asset side, we'll take it to the liability side. So any item that comes from asset to liability will become plus to minus or minus to plus. So this is plus. So when it comes other side becomes minus. So you have to minus this from your yes. So you have to minus this from your issued, subscribed, and paid up capital, because this represents the total face value of the share. That is total capital, total called up capital. From the total called up capital, I have to minus the unpaid capital. So I'll be getting the total paid up capital. So totally I've called 100 rupees. In that 1 rupee is not paid. So balance how much is paid? 99. So totally I've called 100 rupees. And then how much is not paid? 1 rupee. So how much is paid? 99. So I have to get this paid up value to be traveling to your face of the balance sheet. So from the total called up capital, I have to minus the calls in arrear, which is unpaid capital. Hence, we are showing the presentation this way. Any problem here? Online people, any problem here?
No, sir.
Okay. So this will go where? Yes, in the equity share capital by way of minusing it from the total subscribed and issued capital. Wonderful. Land and building, property, plant, equipment, plant and machinery, property, plant, equipment, furniture, PPE, general reserve, reserves and surplus, loan from state financial corporation. As of now, I'm putting in long-term borrowing, but we have to see if there is any breakup given for this. Breakup means not what you are thinking. Breakup here means split up. Some people have their own flashback when I say with the word breakup. So people have their own imagination. Don't go there. Come back here. Inventory. Will it go to changes in inventory? Changes in inventory. Inventory given. Sir, P&L also change inventory is there, no, sir? The closing entry is already passed. So this inventory is the closing stock which is coming in the trial balance. This is closing inventory, not opening inventory, because the P&L is prepared. All the adjustments for the opening stock and closing stock is over. So this now directly will go where? In your balance sheet asset side. What is asset? Sir, anything that we own in the business is asset. So inventory, you have it in the end of the year. You own it. So it is your asset. So where will it go? Under current asset. Where under current assets? Under inventories. So this will go under inventories. Any problem? No problem. Provision for tax. Short-term provision. Why it is short-term? Because I have to pay this tax within the next 6 months. or next 7 months, within that I have to pay the money because I have to file the income tax returns. So I have to pay the money. So it is short-term provision. Trade receivables. Trade receivables. Current asset only. Which category? Trade receivable itself is a category. Short-term advances. Short-term loans and advances. Wonderful. P&L account. Reserves and surplus. That only add. Where do you add it? Under surplus. Not under reserves. Under surplus you will add it. Yes. Cash in hand. Cash and cash equivalent. Very good. Cash at bank. Cash and cash equivalent. Unsecured loan. Unsecured loan. Nothing mentioned means as of now we are taking into long-term borrowing. In the notes, if they have given any additional information, accordingly will change later. Trade payable for the goods and expenses. Trade payable under current liabilities. Loans and advances from related parties. First of all, this loan did we give or we have taken the loan? How do you say so? Now you have to see, that is the word is also correct. What you're saying, grammatical also you have to see. Plus you have to see the column. It is coming in the credit balance column. Credit balance will come only for liabilities. Means what? You have taken this money from the related parties and you have to repay in future. Anything that we repay in future is liability. And liability will have what balance? Credit balance. So this is a liability. It's a borrowing. Now my question is short term or long term? In case of unsecured loan and in case of loan from state financial corporation, nothing is mentioned. You said long term. Now here, loans advances from related parties, nothing is mentioned here also. What will you take? You'll take short-term borrowing because I told you whenever you deal with the related parties, always it is for short-term period. With the related parties or from the relatives, always we ask the short-term help. For long-term help, we will go to the financial institutions because the job of the financial institutions is what? To help us for the longer period. Related parties will only give you timely short-term help. They will not give you long-term help. So this will go to your short-term borrowing. Hari, what happened? Now, the following additional information is also provided. Now, we have to see what are the adjustments given. The first point says that 10,000 equity shares were issued for consideration other than cash. Do we need to give any impact in the financial statement? Yes, in form of disclosure. Where under? Yes. Under notes to accounts, you have to give a disclosure. Okay, is this no cash consideration or non-cash consideration? These were issued for consideration other than cash. Means it is non-cash consideration. Consideration is there, but is in non-cash form. So like this, you have to give a disclosure. For non-cash consideration, disclosure is for 1 year or 5 years? 1 year. Then for which it is 5 years? Bonus issued is 5 years. Very good. Chalo, great. Which means I'll come back here. I'll put a star mark. Why am I putting a star mark? Because when I do this part, I have to take care of the adjustment. So I'm putting a control point. Next, trade receivables of 2,60,000 are due for more than 6 months. Are due for more than 6 months. Means what? Out of the trade receivable, whatever we have, how much it is there? 10 lakh. In that 2,60,000 is already due for payment. Means the due date is already hit. But my customer did not pay for more than 6 months. What is remaining amount? 7,40,000 are those trade receivable for which the due date hasn't yet come. Either the due date vandirchu and payment has not happened. So we have to tell to our users of the financial statement that this money is due to receive for more than 6 months. It's been 6 months, we're begging, but still money is not coming. Whereas this 740 is of those people whose due date is yet to come. Can you feel the difference? So one set of people, due date crossed, donkey fellow these are. Another set of people, due date yet to come. Are you able to differentiate between the both? So aging is for whom? Aging is only for those people whose due date is hit. Still, they have not made the payment. So aging is only for those people. So can I put a star mark here? Because I have to disclose this in the notes. Then cost of the asset is building 30 lakh, plant machinery for 35 lakh, furniture 3,12,500. I didn't understand this point. Chalo, I'll ask you one question here. Depreciation. When they record the entry for depreciation, are they following normal method of depreciation or provision for depreciation method? Normal method means what? When they recorded the entry for depreciation, they would have recorded depreciation account debit to asset account. Did they pass this entry or did they pass depreciation account debit to provision for depreciation?
Provision for depreciation.
Depreciation to asset. Two reasons. Had they done depreciation to provision for depreciation, in the trial balance, provision for depreciation should have been visible. Do you have provision for depreciation anywhere in the trial balance? No, which means they didn't follow PFD method, they followed normal method. Second, if you see, whenever you record the entry depreciation account debit to asset account, the asset is credited, means what? The asset value is reducing. Correct? No. If you look at the value of the land and building, they're telling the cost is 30 lakh. Cost is 30 lakh. Now the value is how much? 27 lakh 50,000 rupees. From 30 lakh, how did it become 27 lakh 50,000? Because of depreciation. So depreciation was recorded in the asset account. Hence the value was written down. So this is written down value. This is written down value. So whenever the assets are reflecting at the written down value, whenever the book value of the asset is at the WDV, it means that they followed normal method, not TFT method. Anybody who's not clear of this point, you have to strengthen your depreciation chapter, which has been discussed in the CA foundation level. So I'm putting one star mark here, here, and here. Shallow, great. Next, the balance of rupees 7,50,000 in the loan account with State Finance Corporation is inclusive of 37,500 for interest accrued but not due. The loan is secured by hypothecation of plant and machinery. Oh, oh, oh. So this point is talking about the loan from State Finance Corporation. So what is the loan from State Finance Corporation? 7,50,000 is the total loan, sir. Okay. What are they telling? Sir, in this 7,50,000, which is there in the trial balance, loan from State Finance Corporation, this is having a value of 37,500, which is interest accrued but not due. So the accountant of the company had made a mistake. Instead of recording this interest accrued but not due in which category? Other current liability. Instead of recording this in other current liability, he put under where? Loan from State Finance Corporation. So what are we supposed to do? We are supposed to regroup it. So we have to minus this 37,500 from here, long-term borrowing, and record this under other current liabilities. Other current liabilities, we have to record it. Any problem? No problem. So what am I doing here is that ding dong. One is how much? 37,500. So this is going to other current liability. Remaining is how much? 7 lakh 12,500 goes to your long-term borrowing. So which means there is an adjustment for this also. Next, balance at bank includes 10,000 with Omega Bank Limited, which is not a scheduled bank. So what are we supposed to do? Schedule 3 says that if the companies put any money in the scheduled bank or non-scheduled bank, it is disclosed separately. Scheduled bank means are those banks which comes under the RBI guidelines. Non-scheduled banks are those which is not under the control of RBI. So you have to disclose this separately. So I'm putting a star mark here. Wonderful. Then transfer 20,000 to general reserve is proposed by the board of directors. So at the end of the year, whatever is the profit, from that we have to transfer 20,000 to general reserve. So we'll add it to general reserve and minus it from P&L. So I'm putting star mark in the P&L. Last point, board of directors declared dividend of 5% on the paid up capital on 2nd April 2001. So this will not affect your financial statement, but you have to give a disclosure. The concept of this I will discuss once we complete this entire question. I have to explain this entire concept, which might take 15 to 30 minutes. So once I explain the entire concept, you'll understand what is the significance of this line and what is the treatment of this in the financial statement. So last point, keep it pending. Rest all, can we do it? Wonderful. Start, guys. Start. What will be the heading? Alpha Limited. In the books of Alpha Limited. Or Alpha Limited also is fine. Next heading. Balance sheet as at 31st March 2001. Wonderful. Next. Headings. Before that, yeah, format, particulars. Note number 31st March 2001. Under that one, equity and liabilities. Under the first one is shareholders funds. Under that we have share capital. Very good. Do we have any note for that? Yes, note 1. Then B is reserves and surplus. Note number 2. C is not required, no? There's no information on the share warrant. We can skip it. 2 is what? Very good. Non-current liabilities. Because share application money pending allotment, there's no information. We can skip it. So non-current liabilities. Under that we have the first item is long-term borrowing. Do we have to give any note for long-term borrowing? Yes, note 3. So by doing this format, we'll get to know how many notes you have to prepare. B. Deferred tax liability and is not there. So next is other long-term liabilities. Other long-term liability is not there. Sorry, then we can leave it. Sorry. Long-term provision is there, not there. That's all. So only one item under non-current liability. Third one is current liability. First one is short-term borrowing. Do you have any short-term borrowing? Yes. What Kritin? Yes, okay. Short-term borrowing. Online people, please open your mouth and respond. Okay. B. Trade payable is there? Yes. For short-term borrowing, do we need to give any note? Short-term borrowing, any note is required? Only one item is there, no? In that case, you can do it directly. What if they didn't done in textbook? Have they given the note? They've given the notes, no? So we'll put the note. Trade payable not required. Directly we can write. Trade payable, any aging is given? Not given. That is only trade receivable. Next, C. What is C? Other current liabilities. Yes. Other current liabilities. Note number 5. D. Short-term provision. Short-term provision. Note number 6. I think in textbook they are given note 6 for short-term provision. Is a separate note given for short-term provision? Okay. Other current liability is not given. What is coming in OCL? But we'll create a note. It's okay. I know that is the main problem with ICAI, that here and there they change the presentation, but we'll stick on to the one presentation. Now, Can we do it? Okay, chalo. Let's give note 1. What is heading for note 1? Share capital. Under that, authorized share capital. Any information is given on authorized share capital? We can leave it blank. What have they done in textbook? You can write it and leave it blank. Next is issued, comma, subscribe, and paid up capital. Under that, 50,000 equity shares of rupees 100 each. Please add in inner column. How much? 50 lakhs. Less calls in arrears. 5,000 rupees. So in the outer column, how much it is? 49 lakh 95,000. 49 lakh 95,000. Without forgetting, you have to give a disclosure. So what is the disclosure? Just copy paste from the textbook. 10,000 equity shares are issued for consideration other than cash. Only for today's class, I'll be doing the entire question along with you. In future, all the questions will be discussing. You will be doing the answers. Next, without forgetting, record this in the face of the balance sheet. How much? 49 lakh 95,000. Next is reserves and surplus. Note 2. And then the first one is what? Any reserves is given specifically here? General is not given, no? We have to create. We are supposed to create. There's given, the balance is given. Where? Ah, already there. Okay. General reserve. Now we can do this in two format, vertical format and horizontal format. What is horizontal format? Opening balance, additions, subtractions, and the closing balance. This is horizontal. Vertical means what? Opening balance, addition, subtraction, and the closing balance. Either ways we can do it. Opening balance is how much? 10 lakh 50,000. Add transfer from T and L. How much? 20,000, no? So it became 10 lakh 70,000 in the outer column. Second is P and L. In the inner column, how much? 4,33,500. 4,33,500. Less transfer to general reserve minus 20,000. So I'll get 4,13,500. Total how much? 14,83,500. 14,83,500. Honorable people, are you all working out along with me?
Yes, sir.
Yes, sir.
Wonderful. ₹14,83,500. Note 3. What is note 3? Very good. Long term borrowings. Now here, you're told it is secured, no? No, loan is secured. Loan from State Finance Corporation is secured by hypothecation of plant and machinery. So under that heading, secured borrowings. Secured. Under that, loan from State Finance Corporation. In the inner column, how much? 7,50,000 rupees. Less interest accrued but not due, which is part of other current liability. How much it is? 37,500. So what am I left with? 7,12,500. You have to give a note here. Loan is secured by hypothecation of plant and machinery. Because guys, though you have put secured, see, some people think that, sir, here I have put secured. No. So do I need to give the description? Yes, because you have to tell me this is secured against which asset. So under secured category, you're writing this, but under that, this is hypothecated under which asset or against which asset. That disclosure is important. Secured by hypothecation plant and machinery. Any problem? So 7,12,500 in the outer column and on the face of the balance sheet. 7,12,500. Short-term borrowing. From related parties. They have not mentioned which one. In reality, they'll mention which related party it is, but they have not mentioned, so we'll just write categorically. How much it is? 2 lakhs. That's all. In my opinion, example, for if you have any one item, it is better to write directly in the balance sheet. If there is any important information to be given against it extra, then having a note makes sense. But otherwise, you can write this in directly in the main heading also. Very good. Wonderful. Sir, you have written loan from State Finance Corporation. Okay. There's something called as unsecured loan, no, which is a part of long-term borrowing. Why was that not considered? Is asking. Why was it not considered? So, sir, if means here, if there is a problem, in exam also this problem can happen. So, how do we have the control point? So, as and when you record it, you're supposed to do the cross mark. So, this is done. You have to go and check if there is any other long-term borrowing. So, if there is a long-term borrowing here and which is not stricken off, which means that is not yet recorded in the balance sheet. That is the entire exercise for purpose of having the control sheet. Yes. See, the question is, sir, can we write this all in the question paper? Technically not allowed. But this risk we have to slightly take. Right? That much, how much you can see it. Somewhere little bit control point is essential, without which it is going to be dangerous. So now what do we do, sir? What do we do? I have no options. I mean, I have multiple options. I can erase this. I can create space for my own. Can you do it? Can you do it? If you have space, well and good. Otherwise, suffer. B. Now unsecured loan. So now another category. B category, unsecured category. Not B, it is second category. Sorry. 2. Unsecured. Under that A. Unsecured loan. Any breakup is given for this? No, directly 6 lakh 5,000. So 6 lakh 5,000. So now I have to put this in the outer column. 7 lakh 12,500 and this is 6 lakh 5,000. 13 lakh 17,500. 13 lakh 17,500. Short term borrowing how much? 2 lakh. Trade payable directly we can record. How much it is? How much is trade payables? 8 lakhs. Other current liability only one item. Yes. Sorry? Which one? Ah, to be very careful. Note 5 is what? Other current liabilities. In that, interest accrued but not due. How much? 37,500. Short-term provision. How much it is? Provision for taxes. Provision for taxes 6 lakh 40,000 rupees. You have to give a note separately. In exam, if you have time, you give it. Otherwise, you can write directly also. Note 6. Short-term provision. Under that, provision for tax. How much? 6 lakh 40,000. Total, please. 94 lakh 73,500. Others? Others?
94 lakhs 76,500.
76 or 73? 73,500. 94 lakh 73,500. Dharini, you got 76?
Yes, sir. Let me check it out.
Total. Yes. Next, B. I said it's not B, it is 2. Roman 2. Under that, the first one is non-current assets. Under that, property, plant, equipment, and intangible assets. Sir, can we write this shortcut in exam? If time permits, you write the elaborated one. Otherwise, shortcut is also fine when time is not sufficient. Property, plant, equipment, and intangible asset. Under that, first one, property, plant, equipment. Second one, intangible assets. Do we have? No, we can skip that. So note number 7. Then, do we have capital work in progress? No. Intangible assets under development? No. Directly B. B is non-current investment. Do we have any non-current investment? No. Then deferred tax asset? No. Then other current? Other non-current assets? Anything? No. That's all? Only one item under non-current assets? Okay, sir. Second one is current assets. And then the first one is inventories. Note number 8. Okay. Next, B. Trade receivables. Aging is required. So note number 9. C. Cash and cash equivalence breakup is there. Again, you have to give a 10. D. Short-term loans advances do we have? Yes. Short-term loans advances. Then that's all. Other current assets is not there. Short-term loans advances you can write directly. Also, only one item is there, or you can give a note. What have they written in textbook? Directly they've written. Directly written no. So we also write it directly. Now note number 7. Note number 7. Property, plant, equipment. Under that, particulars, gross block, accumulated depreciation, net block. Technically speaking, whatever the value is given in the trial balance, directly if you take and total that and put it, more than sufficient. But we are here not just to prepare the balance sheet. As a CA, we have to take care of the disclosure requirement also. But in reality, if you see the gross block, this gross block will have the opening balance, additions, subtraction, closing balance. Here also opening balance, addition, subtraction, and closing balance. Then we have the net block. But that much drama is not required for this question. So I'm doing at the net level. Now, gross block means what? Gross block means what? Cost. Net block means what? Written down value. Means the value which is coming after minusing the depreciation from the cost. Under that, the first item is land and building. Land and building. How much is the gross block? Gross block, take it from the adjustment. How much it is? 30 lakh. Next item. Plant and machinery. So can we write P&M and come in exam? In case if time is not sufficient, you may write it. Nothing wrong. P&M how much? 35 lakh. Third is furniture. How much? 3 lakh 12,500. And then where will you get the accumulated depreciation from? So that we cannot get it, so we have to calculate. It's a balancing figure. So which means, are you trying to tell me the net block is available? Yes. How much? 27 lakh 50,000 in the trial balance. Land and building. How much? 27 lakh 50,000. 26 lakh 25,000 for plant and machinery. 26 lakh 25,000 for plant and machinery. 2 lakh 50,000 for furniture. So now this is balancing figure. Hey, slowly, man. How much? First one. 2 lakh 50,000. Okay. 8 lakh 75,000. Okay. Eh? 62,500. Okay. BF, BF, BF. BF stands for balancing figure. Which one is total? I want net. Yes. 56 lakh 25,000. Always the final amount travels to your balance sheet. 56 lakh 25,000. The net value. Easy. Note number 8. Inventories. First one is raw material. How much? 2 lakh 50,000. Next is finished goods. How much? 10 lakhs. Total how much? 12 lakh 50,000. Online people, you're not opening your mouth. 12 lakh 50,000. Online people, are you all working along with me? Dharni, Gaurav,
Yes, sir.
Sumanyu, Reshma, Revati, Sudarshini.
Yes, sir.
Yes, sir.
Yes, sir.
Everybody. Okay.
Yes, sir.
Trade receivable. Trade receivable note number 9. Trade receivables due for more than 6 months. 2,60,000 rupees. Others, how much? 7,40,000. Total how much? 10 lakhs. As a chartered accountant, you have to ensure the disclosure requirements is properly met. Note 10. That the first item is cash in hand. How much? 1,50,000. Second, cash at bank. Non-scheduled bank, how much? So total money in the bank is 12,35,000. In that, the question says this 10,000 is with Omega Bank Limited. Omega Bank Limited. Non-scheduled bank. Yes, please ensure. First is cash at bank heading. Under that, non-scheduled bank. Under that, you have multiple banks. So in that, the bank that we are having it is Omega Bank Limited. How much it is? 10,000 in the inner column. Then B is scheduled bank. List is not given, so it's okay. Directly we'll write the total. How much it is? 12,25,000. 12,25,000. So total how much? 12,35,000. So cash at bank 12,35,000 plus cash in hand 150 is how much? 13,85,000. So look at the details. First is cash in hand 1,50,000. Then we have cash at bank. Now in cash at bank, look at the way the things are divided. First is non-scheduled bank. Second is scheduled bank. So non-scheduled bank is 10,000. Scheduled bank is 12,25,000. Total is 12,35,000. So total money in the bank is 12,35,000. And total money in hand is 150. So total cash and cash equivalent is how much? 13,85,000. In this, do you have any doubts? No. Okay. Short-term loans advances, how much? 2,13,500. Total is 73,500. Online people, is it tallying? Please check. Don't copy paste. Please do your own calculation. I'll wait. No problem.
Tallied, sir.
Sir, could you please show me trade receivables also?
Yes. One second, Kana. Which one in current assets? I'm coming. Somebody, once you're done with this, let me know.
Done.
Done? Okay. This part? Now, there's one thing that I haven't explained, which is the last adjustment of this topic. I mean, this question, not topic, this question. Board of Directors declared dividend of 5% on the paid up capital on 2nd April 2001. In this line, there's one mistake. What is that mistake?
Declared, sir. It should be proposed.
Can we learn this concept? Though this concept is explained twice. Once in 12 CBSE, once in CA Foundation. This is the third time I'm explaining, but I'll explain the same from basics. I'll explain. So don't have to panic. First of all, do you understand what is the meaning of the word board of directors? See, in company, The company is run by the various directors. The top person who's leading all of them is called as managing director. Under that, we have multiple directors. So when all of the directors come together for a meeting to discuss on some important matters, we call it as board of directors meeting. So it's a meeting which is being convened by directors. And these directors put together are called as board of directors. Means these are the group of people coming together to discuss on an important matter. So this is the board of directors meaning. Now, let's understand this point. என்ன மூவி பா இது? Which movie is that? Which movie ringtone? Huh? Hindi or English or Tamil? Hindi. Huh? Okay. Concept of proposed and final dividend. Guys, please pay full attention. Very, very important point. Not just from this chapter point of view. In the upcoming classes, we'll be discussing some important chapters. For example, cash flow statement. There also this point will be connected. So please pay full attention to this. Please tell me, we are into which financial year now? 24-25, which means in next, how many days? 13 days. We are on 18th March 2025. Next 13 days or next 13 days will be done with the financial year 24-25. So this is our current financial year 2024-25. So we are somewhere here. Correct? My question goes to all of you. In next 13 days, if the next 13 days passes by, and if I ask you to give me the proper P&L and balance sheet, will you be in position to give me? When I say proper P&L balance sheet means with proper P&L balance sheet which is reflecting true and fair view. Why not possible? Because you said no, sir. Accounting is a systematic process of identifying business financial transaction, measuring in terms of money, recording through journal. Journal means what? You record the journal on everyday basis in the chronological order. So every day you're recording journal, no? So on 31st day till 31st day, all the entries are recorded. So account should be ready, no? So why it is not ready? Yes, sir. Technically, 95% of the entries will be passed. The transactional entries will be passed. But apart from that, there are certain adjustments that we have to do to ensure that the financial statement is true and fair. Correct? So, depending on how big your company is, depending on how big your accounting team is, you will additionally need a few days to finalize your accounts. You might need 1 week to finalize your accounts. You might need 15 days to finalize your accounts. You might need 30 days, 45 days, 60 days to finalize your accounts. Sir, what do you mean by finalization of the accounts? Finalization of the accounts means apart from this 95% of the accounting that you do on day-to-day basis, you have to still carry out 5% of the accounting work, which is nothing but passing the adjustment entries. Can you please tell me what are the different types of adjustment entries that you have to pass? So first is adjustment entries for closing stock. Adjustments for closing stock. Next, prepaid expenses, outstanding expenses, accrued income, unearned income. So all these are adjustments. No, we've been studying since 11th standard. So these adjustments we have to do. Then adjustments for depreciation. Guys, it is not easy to calculate the depreciation just like that. In a company, let's say huge company like Reliance Limited, how many assets are scattered across multiple places? Different assets. You have to calculate. It's not easy. It takes a lot of time. So depreciation adjustment needs to be done. Then all the adjustments for interest. Interest on what? Interest on loan, interest on capital, interest on drawings, like that, multiple type of interest. When I say interest on loan, how many different types of borrowings are there? Interest on bank loan, interest on debentures, etc., etc. So it takes time. Like that, multiple adjustments you have to do. What other adjustments can you think of? Sir, the adjustments for adjustment, provision entries, provision for doubtful debt, provision for discount, all the provision entries, provision for tax. So all these has to be done, no? So by 31st March, on 31st March, we can do it. If the company has got a chartered accountant on board as an employee of that company, maybe he can get these adjustments done, but still here and there few things will be missed out. Are you able to follow? So as on 31st March 25, you will never have your 100% accounts ready. It might take another 1 week of time, up to 60 days or 90 days to finalize your account. Finalization of accounts means what? The account should be after all these adjustments. So once you have these adjustments in place, now the financial statement that you've prepared, you can say to an extent that is true and fair. But still we don't believe you. So what does the company do? The company has to appoint a chart accountant called as a statutory auditor, who is an independent chart accountant who has got no influence on the company. And the company has got no influence on that particular auditor. So you have to appoint an independent auditor. This is a compulsory norm as per company law. Company law says that you have to get your accounts audited, irrespective of whether you have profit or loss, irrespective of whether you started the business or not. Whether you have started the business or not, I don't care. Once the company is incorporated, you have to appoint a statutory auditor and get the accounts audited, get the financial statement audited, signed by the chart accountant. Am I loud and clear? Now coming back. So let's say from 1st April to 30 April, this company has taken 30 days to finalize the accounts. Do you have any problem in this point? No. In this 30 days, what has happened? So all the adjustment entries were taken place, including one more thing I would like to add here. In CA Foundation, we have studied something called as valuation of inventories. In that valuation of inventories, we studied that we do carry out something called as physical verification of the stock. Means the stock which is reflecting in the books, you have to compare whether that much quantity of the stock, that much value of the stock is there physically or not. So once you become a inter qualified, so once you're qualifying inter, when you go to articleship, every 31st March, every 30 March, that is 30 March, 31st March, 1st April, 2nd April, 3rd April, all these dates you will be at the client place taking the physical verification of the stock. You're trying to check the quantity of the stock which is there in the book, whether the same thing is there in the floor or not. Floor means what here? In the godown, warehouse, it is there or not. So all of you will be there in the physical verification of the stock. So this also takes time, no? So sometime the client is not available on 31st March to carry out the PV. Or as an auditor, you don't have the time to go and do the PV because you might be in some other client place. Guys, as an auditor, I'll have multiple clients, no boss. So I will send some of my articles on 30 April. Some I'll send on 31st, some on 1st, 2nd and 3rd. So which means in this kind of scenario, definitely on 31st March, my accounts is not 100% ready. Hence I said that depending on how big your company is and how much big you have accounting team and how big your audit team is, depending on that, you'll additionally need 1 week to almost 90 days to finalize your books of accounts. In our example, how many days are we taking? 30 days we are taking. Any problem in this? Online people, any problem in this? So 1 April to 30 April, 30 days you have taken to finalize the books of accounts. What is happening after that? Once the books are ready, you will invite your auditor to come and audit the accounts. You'll give an email, tell them, sir, we are now ready. Please send your team and get the accounts audited. So depending on how big the audit team is, depending on how big the company is, the auditor might need 1 week to again 30 days to carry out the audit function. Each and every line item, he will do the testing. How the testing needs to be done, you'll be discussing in the audit subject in group 2. And a lot more things you will learn practically when you actually go and work under your principal, that is articleship period. So here from 1st May to 31st May, what are you carrying out? You're carrying out statutory audit, which is a compulsory norm as per Companies Act 2013. So 31st May, the audit is finalized. Audit is finalized means what? The articles have completed their audit. The boss of those articles have done the review. Now, the boss of that CA is yet to sign the document. That is yet to sign the financial statement. So, sir, when 31st of May, everything is ready, why can't the auditor sign here? Because auditor is waiting for one more information. What is that information? We'll see now. So, 31st May, once the audit function is over, audit work is over, immediately this information will be passed on to the board of directors. Then the board of directors will, convey a meeting called as board of directors meeting. In that, there are a few important points will be discussed. In that board of directors meeting, your partner, audit partner, or your principal will be a part of that meeting. In that meeting, there's one very important point. As a partner, I'm interested to know. In this board of meeting, there are important points that many other points discussed. In that, there's one important point which I am relying on, because without that information, I cannot sign the financial statement. What is that information? Yes. Sir, let's say immediately, the next day, 1st of June, the board of directors meeting has been convened. And in that meeting, I want to know what is the board of directors proposing the dividend percentage. What is the percentage of dividend proposed by the board of directors? Now, what we have to understand is, sir, what is the meaning of propose? What is the meaning of propose? I'm sure all of you are familiar with this word propose. When a boy proposes the girl, is it a conclusive meaning that the girl is accepted? Propose means what? Offer given. Offer for marriage given. Ultimate decision is with whom? The girl. So here, in this entire discussion, board of directors is like a boy who has the authority only to propose. Nothing beyond that. Board of directors have only authority to propose. So in the board of directors meeting, the board of directors has to propose the dividend. Let's say they're proposing in terms of, they do in percentage, but I'm telling in terms of rupees. Rupees 10 rupee per share, they're proposing to give us dividend. When I say board of directors are proposing it, does it mean that we are giving this dividend to shareholders? Now, the Companies Act 2013 have made the board of directors kind of handicapped in this scenario. The Companies Act 2013 said that the board of directors do not have the authority to decide the final dividend. The final dividend will be decided and be approved by the shareholders. So Companies Act 2013 has given the decision-making authority in whose hands? Shareholders. Because shareholders are the owners of the company. So if all the decision only board of directors take, then what is the purpose of the shareholder? You tell no, shareholder is a member, owner. So as a shareholder, what right are you giving me, boss? So something should be given for namesake. Something should be given to shareholder, no? So there are few important things which is given in the hands of shareholder. One among those are approval of dividend. To make the owner, or to give the owner a sense of ownership, to give the member a sense of ownership, this decision was taken by Companies Act. More about this we will study where? In law. In law, your law teacher will give you more insightful information on this. I am trying to discuss this point which is relevant from the accounting perspective. Now, board of directors have proposed the dividend. Means what? Companies Act has not given the authority to the board of directors to approve it. Unless the dividend is approved, unless the dividend is being declared, I cannot record the dividend payable entry. I cannot record the dividend payable entry. So now, in this case, this dividend what is being proposed, 10 rupee per share. Let's say there are 1 lakh shares. So 1 lakh shares into 10 rupee per share dividend means how much? 10 lakh rupees is there, no? So in the board of directors meeting, this 10 lakh rupees dividend is proposed. Now this, where will I disclose in the financial statement? I will disclose this information in the financial statement under contingent liability, just a disclosure. What is contingent liability? I'll discuss in some time. This will be disclosed under contingent liability. Now next what happens? Sir, on 1st June, after the board of meeting has been convened, after the board of directors meetings are over, 2nd June or 3rd June or 4th June or 5th June, next 2-3 days, this information is incorporated in the financial statement. The auditor who is present in that meeting, he will pick up that information, he will put that information in the contingent liability of the financial statement, and that day he will sign the financial statement. Financial statement is signed by the auditor. Do you understand the process? So 31st March, the accounting was over. From 1st April to 30 April, the entire company's accounting team had carried out the finalization of the accounts by passing all the adjustment entries. 30 April, the adjustment entries was over. Then what did you do? You called your auditor to come and carry out the audit function. So once they came from 1st May to 31st May, they carried out the audit procedures. Once the audit procedure was completed, you had informed whom? Board of directors. Then board of directors had called for the board of directors meeting to discuss multiple matters. In that, one important matters relevant to us was discussed, which is proposal of the dividend. Which dividend? Equity dividend was proposed. Okay. Once this information has been, come out, now the auditor of that company will take that information, and on 5th June, while sending the financial statement, he has to put that information where? Under contingent liability. Where will the contingent liability come? We'll discuss in some time. Once the financial statement is incorporating the contingent liability, the auditor is now good to sign the financial statement. Now, on 5th June, the financial statement has been signed. The auditor of your company is putting a seal and is signing the document, which means what? Now that financial statement is called as audited financial statement. It is called as audited financial statement. Can you make any changes in the financial statement of that year? No, because once the financial statement is signed by the auditor, once you call that as audited financial statement, you cannot make any alterations thereafter. Sir, okay. Now what happens? After 5th of June, this signed financial statement, we hand over the copy to the company. Now, what does the company do is the company prepares the document called as annual report. It prepares a document called as annual report. What are the contents of the annual report? In that you have board of directors report. In that you have the financial statement. In that you have the audit reports, notes to accounts, cash flow statement. It's a complete document. I'll be discussing about this at the end of this chapter. So once the financial statement is signed, you will hand over this copy to whom? The company. Now the company is having the responsibility to prepare one document called as annual report. Annual report. In this annual report, you have multiple contents to be incorporated. You will have board of directors report. You have financial statement signed, audit report, notes to accounts, cash flow statement, like that, multiple documents. Each document I'll discuss at the end of this chapter. All this document is being compressed together. Like, you've seen a magazine. Like a magazine, they keep this report ready. It will be a booklet of multiple pages. This annual report, they have to send to the shareholder, either physically or in the soft copy manner, electronic mode. They have to send the annual report. So let's suppose I'm the shareholder of the Reliance Limited. So let's say somewhere 10th June or 12th June, the company will send me the annual report. So I will go through the annual report. In that, they'll also invite me to the meeting called as annual general meeting. Annual general meeting is a meeting that has been, it's a compulsory meeting that the company has to conduct, where the shareholders across the country, where the shareholder of that company across the country will come and participate in that meeting to discuss certain important matters. Which topic or what agenda of the meeting is, that will be discussed by your law teacher in the law subject. But one of the important topic which is relevant to the shareholder is to approve the dividend that has been proposed by the board of directors in this annual general meeting. So annual means what? A meeting that is conducted once in every year. Annual means what? Once in 12 months. So it is compulsory for a company to conduct an annual general meeting where you invite all the shareholders in that meeting and discuss the important points. What will you discuss? You will discuss the progress of that year. You'll discuss the status of the financial statement. You will give the authority to the shareholder to approve the dividend. You'll give the authority to the shareholder to appoint the auditor. Yes, you heard me right. So shareholders of the company discuss and decides which auditor should be appointed. So like that, there's so many agenda which will be discussed in this AGM, which your law teacher will discuss in detail. I am talking about one agenda which is relevant to accounts at this moment, which is approval of dividend. So in this meeting, what will happen? The person who is, conducting this meeting, like how in award show we had MC, like that, there'll be a person who will be interacting with the shareholder. He will say that on 1st of June, the board of directors meeting was held. In that meeting, the board of directors have proposed a dividend of 10 rupee per share. A dividend of 10 rupee per share. So all the shareholders, please give a vote whether you want to approve this dividend of 10 rupee per share or not. Now here the shareholders got right to what? Approve this 10 rupees as it is. If the shareholders believe that no, giving 10 rupee per share will be too much of outflow of the money and this will hamper the business. How? Because whatever the reserves you have, whatever the savings you have, if everything you give to shareholder, then nothing is left in the company. So in case of emergency, where will the company go? So some shareholder might be of the opinion that, sir, please don't give the entire 10 rupee per share. You give only 4 rupee per share. Remaining 6 rupee per share, let that money be in the company for future expansion purpose, future emergency purpose, you use it. But don't give the full 10 rupee. So you have the right to reduce the dividend. From 10, you can make it to, let's say, 4, 3, 2, 1. You may even make it 0, telling that, no, sir, we don't want any dividend. Because we are planning one important project in that particular city. No, for that you need money. No, so for that you reserve this money. So don't declare dividends, sir. Like that, even the shareholders might say. So the dividend declaration is possible. So what is the option to the shareholders? Shareholders may declare the same dividend what has been proposed by the directors. They may reduce the dividend to be declared and they may make it even 0. But they cannot increase the dividend beyond what has been proposed by the board of directors. Can the shareholders make the dividend from 10 rupees to 15 rupees per share? Not possible. They cannot increase. Why they cannot increase? Correct. But why? See, the board of directors are those people who are throughout the year, 365 days, they are operating the business. They know how much money is required at what point of time. They know what is the business plans, business proposals, and business expansions. The view that the board of directors have, the shareholders will not have. For example, let's say all of us are the shareholders of Lands Limited. In that company, internally, what is happening? Do you have a view? No. So if you say, no, I want 15 rupees dividend per share, means extra 5 rupees means, first of all, money should be there. Second, that company would have planned an extra 5 rupees for expansion purpose. If that money you ask now, where will the company go? So you as a shareholder do not have the intricate insights and details about the company's future prospects, expansion purpose. So board of directors know what is the right amount of dividend to be given. So they will propose what dividend to be given because they are the better person to decide how much money they can maximum shell out. Beyond that, you cannot ask. If you want to reduce it, make it 0, but you cannot ask more than what they are proposing because board of directors know very well how much money they can shell from their pocket. Am I loud and clear? So therefore, the shareholders can not increase the dividend, but they can decrease it or even make it 0. Now, in the AGM, if the majority of the people are voting in favor of this dividend, then this dividend is called as declared dividend. The majority of the vote is coming in this, let's say 10 rupees. If this is what the majority what we are getting, then this dividend is called as declared dividend, which means what? The dividend which has been proposed by the board of directors has been approved by the shareholder. The boy who proposed with that rose is been approved by the girl. So who is girl here? Shareholders in the AGM. Who is boy here? Board of directors. Any problem? Will you forget this entire process? Now my question does not stop here. I mean, discussion does not stop here. I have a question to all of you. Once on 15th of July, the AGM is approving or declaring 2 words. Approval is 1 word, declare is 1 word. Both are same. They will interchange the word. Dividend declared means what? Approved. Dividend approved means what? Approved. Once this has been approved, in accounting, what impact will happen? Sir, next day after the meeting is over, this information will be given to the accountant of that company. Now that accountant has to pass the entry because now the dividend is declared means what? The event is triggered. This event is triggered. There's a liability that is arising because the shareholder says that, okay, let's approve the dividend, which means what? The dividend, the moment it is declared, it is the responsibility of the company to pay the money within 30 days. Company law says that within 30 days of dividend being declared, the amount of dividend needs to be disbursed. The payment needs to happen. Who's saying this? Companies Act is saying. So 15th of July, the moment the dividend is declared, from there, the time bomb will start ticking. How many days? 30 days. Within 30 days, we have to make the payment, which means what? The liability is getting triggered. The obligation is arising. Correct? No? What is the meaning of liability? When you say something is liability, there should be a present obligation. What is present obligation? The moment the dividend is declared by the AGM, you are having the pressure to pay that within 30 days. So the obligation has arisen. Second condition of liability. To call something as liability, it should have 3 conditions. One is present obligation. Second is, oh my God. Present obligation should be there. Means what? There should be a pressure of making the payment. There should be a pressure of settling the amount. So there should be a present obligation. This we have studied in detail in the CA Foundation. Second, there should be economic outflow of money means this obligation should lead to future payment of the money, future outflow of the money. Is it there? Yes. And third, it should be reliably measured. Means what exact amount you're going to pay, that amount should be exactly known to you. In our example, what is the dividend that is total dividend that is being declared? 1 lakh per share into 1 lakh shares into 10 rupee per share. How much? 10 lakh rupees. So my first condition, present obligation is satisfied or not. The moment in the AGM, the shareholders are approving that point, the obligation arises. Second, the moment the declaration happens, within 30 days, I am supposed to pay the money. Yes or no? Yes. So which means outflow is going to happen. Yes or no? Yes. So outflow is going to happen. And third, do you know the exact amount that you're going to pay? Yes. Can you measure that amount reliably? Yes. Accurately? Yes. How much it is? 10 lakh. All the three conditions satisfied. So now this will be called as liability. This will be called as liability. So when will I call this as provision? In provision, the first two conditions satisfied. The third condition is not satisfied. I'm not able to exactly calculate. So I'm approximately calculating. That is provision. So the third condition is not satisfying. Then that becomes provision. Am I loud and clear? Am I loud and clear? So are you clear with what is liability? Are you clear with what is provision? Yes. So what is contingent liability? Contingent liability. Yes. So here on 1st of June, when the board of directors, proposes this dividend of 10 lakh rupees, we call this as contingent liability. What is contingent liability? This is a potential liability. Means what? This liability may be a future liability, but happening of this liability is dependent on a future event. Adavade, this might become a liability in future, might not be a liability. When will it become a liability? The happening of this liability is dependent on happening or not happening of a future event. So now here, this 10 lakh rupees I called as contingent liability. Why not liability? Why not? Because this 10 lakh rupees I will pay only if AGM in the AGM shareholders approve it. If they approve it, I have to pay. If they don't approve it, if they say no, let's not declare the dividend, let's make it zero. In that case, is this 10 lakh a liability? No. So this 10 lakh might become a liability, but it is contingent. Contingent means what? Dependent on happening or not happening of a future event. So this 10 lakh becomes a liability in the future when? If the shareholders approve the dividend. Otherwise, no liability. Another example. Let's say there's a customer who's put a case on Reliance Limited, telling that this company has done some cheating or fraud, and by that I've suffered so much of agony, pain, and etc. etc. So as a compensation, I want 1 crore rupees from Reliance Limited. Like that, there is a case that has been filed on the company, and this case is pending in court of law. When this case is filed before 31st March, correct? Now, there's a demand of 1 crore rupees. There's a demand of 1 crore rupees. Now imagine if you are having a belief that, no, I made a mistake, I may have to pay the money. Approximately, this much is going to be paid. In that case, that becomes a provision. Because you have somewhere inside know that the case, you will lose it. In that case, you will create a provision in the books of accounts because there's a present obligation. Why present obligation? Because the decision or the evidences is mostly against you. So there is a possible obligation. There's a possible obligation. Second, if the decision does not comes in your favor, there could be an outflow of money. But what exact amount, we don't know. 1 crore the customer is asking. But the court may order, no, okay, don't pay 1 crore, pay 80 lakhs. So exact amount is not known. So in that case, I will create a provision. But second possibility is what? If the customer has put the case on the company, possibility is that the company may not accept that. It's like, no, I never did anything wrong. So we are not accepting this fact that we are going to lose the case because we feel that we have a strong evidence to prove that the company is right. So we are fighting for it. So customer is also fighting. We are also fighting. In that case, this 1 crore rupees, can I put as liability? No. Can I create a provision? No, because I don't believe that I've done something wrong. I believe what I did is right. But Companies Act says that you have to give the disclosure of this requirement. There's a case on you, no? The judgment can be like this also, like this also. May come in your favor, may not come in your favor. So if you don't want to create a liability as per accounting, if you don't want to create a provision as per accounting, don't do it. But you have to disclose as a contingent liability. So now that 1 crore rupee will be shown as contingent liability. Now, why do I call this as contingent liability? Why? Because this 1 crore rupees I may pay, I may not pay. It is dependent on the order that the judge will give. So if judge gives in my favor, means I don't have to pay the money. So whatever contingent liability given in the notes to accounts, with that it becomes swaha. Or if the court gives the judgment against us, which means the court wants us to pay 1 crore rupees, the day the judgment is coming, then you'll cancel the contingent liability and you'll pass an accounting entry in the books of accounts in that day or on that day when the judgment was passed. So what is contingent liability? A contingent liability is a future possible liability. It may come as a liability, it may not come as a liability. How do you know? It is dependent on the future event. So if any liability happening or not happening of that is dependent on a future event, which is not under your control, then that liability is called as a contingent liability. And contingent liability 100% have to disclose in the notes to accounts. So here in our example, this 10 lakh rupees dividend proposed by the board of directors is called as a contingent liability because I may have to pay this money or I may not have to pay this money. I may have to pay this money when? If the shareholders approve that in the AGM. I may not have to pay this money in the future if the shareholders do not approve the dividend. Am I loud and clear?
Yes, sir.
Online people, am I loud and clear?
Yes, sir.
Now my one
Yes, sir.
second. Tell me, okay. Hmm?
Sir, in questions that all we see proposed dividend of last year must be paid this year.
I'll come to that.
So if they say 16 July itself, then why this year?
Okay, I'll answer this. Before that, you have to answer my question. 16th of July, what entry will your accountant record? Two type of entries can be passed. Whichever you are comfortable, you can pass. Some company prefer passing separate entry. Means what? Due entry separately, closing entry separately. After AGM is over, the next day, first entry will be dividend account debit to dividend payable. Dividend account is nothing but your appropriation of profit. It's like your expense. Debit all expense and losses. Correct? No? Let's say if I have 100 rupees profit, in that if I give you 10 rupees profit share, so I'll do plus 10 or minus 10? Minus 10. So what is my balance profit? 90. So this is reducing my income. To increase income, credit. To decrease income, debit. Correct? Or you can treat this as expense also. So to record expense, what will you do? Debit. So dividend account debit to dividend payable. Now this is dividend payable. Dividend payable means what? I'm made to pay the money. When will I pay? Within the next 30 days. So I'm creating a liability. So this entry is like how you know purchase account debit to creditor. When you do credit purchase, what is entry? Purchase account debit to creditor. Means what? Purchase is like expense. Expense account debit to liability. So here the dividend payable what is? Liability. Any problem? So this money I have to pay in next 30 days. So where will I classify in the balance sheet? Sir, under equity and liability. Where under equity and liability? Current liability. Where under current liability? Other current liability. Because I have to pay this money next 30 days. Now. So this is other current liability. Any problem in this? Online people, any problem in this? Now, this dividend payable is like a nominal account. Like every nominal account, we have to close this ledger by passing a closing entry. So this dividend is currently in debit. To close, I have to give in credit. And where am I transferring this to? Statement of P&L. Like for purchase, to transfer the purchase in trading account, what is the closing entry? Trading account debit to purchase. So in trading account to purchase. Like that, this is the closing entry for transferring the dividend to statement of P&L. Any problem in this? No problem. Now, some people say that we don't want to pass two separate entry, we'll combine and record it. So you pass a combined entry. What is the combined entry impact? So dividend in debit and credit is gone. So what am I left with? Statement of P&L account debit to dividend payable. Combined entry is statement of P&L account debit to dividend payable. So which is nothing but if I debit this amount, let's say 10 lakh rupees in statement of P&L, this will have the impact of reducing my profit. Let's say my profit is 100 crore. In that, if I debit 10 lakh to the P&L account, it will be minusing it from here and the balance will be how much? 90. Or let me make this So, 1 crore. 1 crore minus 10 lakh is how much? 90 lakh rupees. Correct? No, 1 crore. 1 crore is the total profit. In that 10 lakh is the dividend to be paid. So 1 crore minus 10 lakh is how much? 90 lakh rupees is the balance amount. So the moment I debit this amount in the statement of P&L, the dividend has got the impact of reducing your profit of the P&L. Am I loud and clear? Now the day when you pay the dividend, what is the payment entry? We reverse the liability by giving a debit, and from the bank account the money goes out. Like when we make the payment to creditor, what is the payment of creditor entry? Creditor to bank. Like that, we reverse the liability and make the payment from bank account. Till this understood? Now I have a very, very important thing to ask. Have all of you done this partnership, accounting for partnership in 12th and CA Foundation?
Yes, sir.
Those who are done CA Foundation, you have studied this in Foundation also. Those who are coming through that entry, you have studied this in 12th standard. We prepared something called as P&L appropriation account. Correct? No? In the P&L appropriation account, you record by net profit here, 1 crore. Correct? Forget the adjustments for IOC, IOD, forget all that. Here, you transfer the share of profit to the partner's capital account. So, in the partnership business, how do you give the profits to the shareholders? Sorry, to the partners. We will distribute in the profit sharing ratio. In the company, how do you give the profit to the shareholders? By way of dividend. So, the dividend that you subtracted here, and the amount of profit that you transfer to partners' capital account, can I say both are same? Let's suppose there are two partners, A's capital, B's capital. So both of them you're transferring 50 lakhs, 50 lakhs. 50 lakh, 50 lakh gone. So balance is how much? 0. So can I say giving 50 lakh to A, giving 50 lakh to B is nothing but giving dividend? Dividend is nothing but what? Profit only, no? In partnership business, in sole proprietorship business, we call that 50 lakh as profit. But in companies, we give a polished name called as dividend. What is the big deal? Or imagine you are distributing 10 lakh to A and 10 lakh to B. So how much profit is still available? 80 lakh is still available. This is the closing balance, surplus. Any problem? So out of 1 crore rupees, if I'm giving 10 lakh to A, if I'm giving 10 lakh to B, this is nothing but distribution of profit. This is nothing but distribution of dividend. So which means from 1 crore, you're minusing 10 lakh for A, 10 lakh for B. So what is the balance in the P&L account or surplus account? It is 80 lakh rupees. My question goes to all of you. This 1 crore is the profit of which financial year? 24-25. When you subtracted the dividend or profit, which year did you subtract? In the same financial year, sir. In the same P&L, in the same P&L appropriation. That is of 24-25 you subtracted. Correct? No? I'm talking about partnership. In the partnership business, in the financial 24-25, you prepared a P&L account. That profit was 1 crore. Then you prepared the appropriation account where you gave 10 lakh to A, 10 lakh to B. You subtracted these both from the profit of the very same year. Yes or no? And you got the balance 80 lakh, which is nothing but the remaining surplus of 24-25. Like this, is it possible for us to do in the company?
Yes.
Can we do it? The answer is no. Now listen to me very carefully. This was a question that Subiksha had asked, so I'm just repeating this point one more time. Please tell me that there are some dates, in front of your screen. For the financial year 24-25, up to what date I can go and pass the entries? Sir, up to 31st of March, I can pass the entries for the year 24-25. Yes? From this period to this period, if there is any rectification to be done, or if there is any error, And if I pass the entry, can I backdate and pass the entry? Yes, you can backdate and pass. Which means from this date to this date, whatever wrong entries I find out, I have the option to redate that entry on 31st March. I'll pass it retrospectively. Retrospectively means what? If I'm today standing on 30 April, I'll open the date and record the entry today. But what date I'll record in the journal entry? 31st March. This is allowed. This is legal. Now, from this date to this date, your auditor is coming and doing the audit, no? He will come and also find some mistakes, no? He'll also come and find some mistake. That mistake, if I have to rectify, I have to pass a rectification entry. What date will I give that effect to? On 31st March only, I can pass the rectification entry. Like that, up to what date can I keep on changing the entries for 24-25? So up to 5th June means until the auditor is signing the financial statement from this period to this period, if I keep on finding the mistakes pertaining to the year 24-25, I can keep on changing the accounts of 24-25. I can keep on passing the entry. But the day your auditor is signing the financial statement, once your financial statement becomes the audited financial statement, can you go and make any entries in the year 24-25? Can you touch the books of 24-25? The answer is no. Correct, no? Now, 16th of July, your accountant has recorded one entry called as dividend account debit to dividend payable. This dividend I have to transfer to statement of P&L account. Which year of P&L account can I transfer? Can I transfer this dividend in 24-25? Technically, this dividend is belonging to which year's profit? Hello? Here, the board of directors proposed 10 lakh dividend, no? This 10 lakh dividend, out of which profit are they going to give? They are going to give it out of the profit of 24-25. That is in 24-25, you prepared a statement of P&L, no? In that P&L, you had income. Total income. From that, you minus total expenses. You got profit before tax. From that, you subtracted tax. And you got 1 crore rupees as profit after tax. So technically, now 10 lakh rupees dividend, what is being proposed? It is proposed out of which profit, boss? It is proposed out of this profit or the opening profit. That is opening surplus. This is current year's profit. So dividend can be given from current year's profit as well as from previous year's accumulated profits. Am I right? But in short, this 10 lakh should be deducted. This 10 lakh should be deducted from which balance? From this 1 crore rupees. Now my question goes to all of you. Until the AGM is conducted, until my shareholders approve the dividend, can I minus this 10 lakh in the financial statement of the current year 24-25? The answer is no. Because the moment you minus 10 lakh here, it means that you're promising somebody that I'll pay you 10 lakh rupees. When do you know that you have to pay this money? After the financial statement is signed. Once your auditor is signing the financial statement, only then you know that you have to pay this 10 lakh rupees. Until 5th of June, do you know that you have to pay this money? Is there a surety of paying the money? No. Because this 10 lakh is until that moment a contingent liability. A contingent liability, will it be recorded in the books of accounts? Only if these three conditions satisfy, you can record as a liability or a provision. But a contingent liability entry cannot be passed. So when the auditor is signing the financial statement, of 5th of June, this 10 lakh rupees dividend is contingent liability, not liability, nor provision. So I cannot give any accounting treatment for this 10 lakh rupees. So which means in no way this 10 lakh rupees is going to be coming to my P&L account. Correct, no? So if you see, this 1 crore rupees is the profit of 24-25, but I am not able to minus this 10 lakh rupees dividend, which is of again 24-25 in the same year. Because the way the rules has been set by Companies Act, the procedure that has been sent by Companies Act, I am not in position, even if I want as an accountant, I am not in position to minus my current year's dividend from the current year's profit. You may say, sir, what happened? No problem, no, sir. After the auditor is signing the financial statement, after that you minus the dividend. Can you touch? No. Once the financial statement is signed, game over. You can't go and alter a single letter, single number, nothing can be altered. But the problem is, sir, this dividend which has been approved by AGM, 10 lakh rupees is belonging to which year? 24-25. But 24-25 ka window is closed. I cannot go and alter. The date is over. Signed. So there is no other option. This 10 lakh rupees you have to minus from the profit of 25-26 only. Am I loud and clear? So this entry, when you pass dividend account debit to dividend payable, and this dividend you transfer to statement of P&L, right? So which statement of P&L is getting captured? This is getting captured in the financial year 25-26. Sir, then are you trying to tell me in the financial year 25-26, the net profit after tax, whatever the amount is of 25-26, but the dividend what we are minusing, the dividend what you're minusing is of 24-25. Is that you're trying to say? The answer is yes. Yes. Proposed dividend. Last year's dividend is what is subtracted from the current year's profit. We are helpless. Because of the Companies Act rule, whatever they have laid down the provisions, because of that, we are not able to minus the dividend of that year with the dividend profit of that year. So that is what we studied in cash flow statement also. In again CA Foundation, sorry, not CA Foundation, CA Intermediate. When I do AS3 with all of you revised, same thing will be discussed one more time. So now, this dividend which has been proposed by Board of Directors is yet to be declared. When will it be declared? After the financial statement is signed. So until the date of signature, can I record this 10 lakh rupees as liability anywhere in the balance sheet? In the P&L anywhere? No. So this has to be given only in form of notes as contingent liability. Just a disclosure that 10 lakh rupees of dividend, that is 10 rupee per share dividend, is being proposed by Board of Directors. You have to just give a theoretical reference. That is all. You don't have to give anything else over and above that. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Yes, sir.
I'm coming to that. Now, the final dividend will not be recognized as liability at the balance sheet date, even if it is declared after the reporting date, but before the approval of the financial statement. This is a big blunder of statement what they've given. What are they telling? The final dividend. What is the final dividend? The dividend that is being finally 10 rupee per share, that is being proposed after the end of the year, that is called as final dividend, will not be recognized as liability because those three conditions of liability is not satisfied. The final dividend will not be recognized as liability at the balance sheet date, even if it is declared after the reporting date, but before the approval of the financial statement. Even if it is declared after the reporting date. What is the reporting date? 31st March is reporting date. But it is getting approval, it is being agreed before the approval of financial statement. How is it possible? After the financial statement is being signed, when you send that report to the shareholders will read that financial statement, they'll come in the meeting, and then only they'll give the approval. Then only the what do you call it, declaration will happen. Then only the declaration will happen. Hence, it has not been recognized in the financial statement for the year ended 31st March 2001. Such dividend will be disclosed in notes to accounts only as, please note down, contingent liability. As contingent liability. The final dividend will not be recognized as liability at the balance sheet date, as it is not declared by the shareholders in the AGM, and hence it will be shown as the contingent liability in the notes to accounts. The final dividend will not be shown as liability as at the balance sheet date, because the three conditions of being called as a liability is not satisfied. Hence, it will be disclosed as contingent liability under notes to accounts. Very simple, we'll keep it. Under notes to accounts. So, under notes to accounts means no. When you're saying under notes to accounts means neither under current liability nor under non-current liability. After all the notes are over, no, you'll have one more box called as contingent liability box at the end that I meant to discuss. Contingent liability and capital commitment, which I'll discuss at the end of the topic. There you will disclose this as a theory point.
So the dates we saw that June 5, are those absolute dates or just it's an example?
No, the question what is being asked now is online people, they're telling that, so the date what you showed here, is it like this is the exact date that the company has to follow? No, this is approximate date. In the company law, you will understand the entire procedure. That is by what date you have to convene this AGM, that they will fix within 180 days of, balance sheet date, reporting date, like that, all the dates procedure will be given in law. Here, what I've taken is approximate date only for understanding purposes. I'm coming. There's no remote. Just reduce it to 24. You have to be careful in class next year to wear sweater and come. Now, this concept, what I discussed is the concept of the proposed and final dividend. But there's something called as interim dividend. Interim dividend means what? The dividend that the company gives in between the year. For example, let's say in the current year, 24-25, the company did exceptional performance from April to June. From 1/4/24 to 30 June 25, the company did 30 June 24. 30 June 24. In this 3 month, the company did exceptional performance. And the company wanted to reward the shareholders and they wanted to enjoy, the company wanted the shareholders also to enjoy that moment. So they decided to give a dividend called as interim dividend. What is interim dividend? The dividend that is given in between the financial year, that is called as interim dividend. Now, like final dividend, the dividend can be proposed by the board of directors. The board of directors can only propose the dividend, but has to be approved by whom? Shareholders in the AGM. For the case of interim dividend, the company law made it very clear that as long as interim dividend is concerned, you need not take any approval from the shareholders. You can go ahead and do the declaration. Who? Board of directors. So board of directors will propose the interim dividend and they will approve the dividend. And once the dividend is approved by the board of directors, you will pass the entry. What? Interim dividend account debit to interim dividend payable, and then statement of P&L account debit to interim dividend. So here, whatever the profit is coming of that year, from that you always minus the interim dividend of that year, because I'm passing this entry in that financial year itself. Are you able to follow? So if I'm talking about 24-25, let's say profit after tax is 50 lakh and I'm giving two dividend, one as interim dividend. So minus interim dividend. Interim dividend of which year? 24-25, same year you'll minus 5 lakh. But final dividend will not be of current year. Final dividend will be of the previous year. So when I'm minusing the final dividend, this will be of 23-24, because 23-24 dividend in the current year's financial year, in the year AGM, I'll be passing the approval of dividend entry. And hence, this 10 lakh is being subtracted. So what is the balance profit? 35 lakh rupees. So if you see, 50 lakh is a profit of 24-25. This 5 lakh is the dividend of 24-25. So from current year profit only, current year interim dividend is subtracted, because the board of directors need not get the approval of the shareholders in the AGM. Till AGM, we are not waiting. The Companies Act has given the powers to directors to declare the dividend then and there on their own. So I'm able to declare the dividend. I'm able to pass the entry then and there. The moment I'm passing the entry is getting captured in the financial statement of 24-25. But unfortunately, in case of final dividend, this 10 lakh dividend is of previous year is getting approved in the current year. So I'm passing the entry in the current year. So it is getting captured in the current year. But this is actually of which year? Previous year. So always in the statement of P&L, when you prepare the entire P&L format, from the current year's profit, you'll minus current year's interim dividend, but final dividend of previous year. So this is very important point to be remembered from the cash flow statement point of view also. Without this, you are not just screwed, you are royally screwed. Now, the big question is, sir, for why interim dividend, the approval of the shareholders is not required? If I keep on calling the shareholders for every meeting, let's say in a year, I'm giving 4 interim dividend every quarter. If I keep on calling shareholders, come to meeting, I want to declare dividend, come for approval. If I keep on calling that gentleman, what will he say? I'm one shareholder invested in your company. One share I have. For that, yearly 4 times he'll call me to AGM and I have to approve the dividend. Second, if I'm dependent on the shareholders, if the shareholders don't come, the meeting is not happening, everything is getting delayed. No? So companies have to go in the faster paced manner. So Companies Act felt that for small things like this, calling shareholders every now and then is not good for the operations of the company because you have to go in a fast paced manner. So hence, the power is given to the board of directors to decide that, okay, for interim dividend, you propose and you declare. But for final dividend, you have to give a sense of ownership to the shareholder. You have to make him feel like owner. Owner சொல்லிட்டு feel கொடுக்கணும்ல அதுக்கு மட்டும் என்ன சொன்னாங்க you discuss this point in the AGM which final dividend interim dividend no need to discuss in AGM you can decide who can decide board of directors can decide then and there and declare any problem
No, sir. Sir,
yes boss
sir, the journal entry for dividends, sir.
journal entry for dividend yes
Sir, the dividend you wrote to dividend payable, other current liability.
dividend account debit to dividend payable that's correct
Sir, the other current liability, so in the year 25-26 it will be recorded as other current liability.
in the year 25-26 it will be recorded as other current liability that's right
But in 1 month we will pay, sir. But
Correct.
at the end of the balance sheet date, it won't be there.
correct so now what happens is what question Kritin is asking sir this entry you passed in the after AGM that is 16th of what date June 16th of July 16th of July you pass this entry within 30 days you have to pay the money which means when will I pay this money 15th of August I'll make this payment so if the payment is done when I come to the end of the year 31st March 2026 then this dividend is not there no sir correct if all the dividend is paid then no problem sometimes what happens the company will give the check that shareholder sitting in foreign country he did not receive the check or maybe he got the check but he did not deposit the check in the bank account so until the money goes from the company's bank account it is not paid no for the company will be payable no see within 30 days the company has to make the payment the company has to send the check nowadays what happens the company is not giving check nowadays the company is making online transfer because your bank account is linked so money comes instantly but I'm talking about a case where the company has given a check the check is received by the customer that is the shareholder but that person did not deposit the check is it my fault within 30 days I dispatch the check so nobody can come and question me if that guy is not clearing the check if there's some problem then what am I supposed to do so law says that you have to park that money in the other current liability because the check can be cleared any time am I loud and clear now this does not end here there's something called as if this dividend goes unclaimed for 7 years so there's a procedure after this that will be covered in law. There's a procedure after this. Sir, what if this person does not claim the money till 31st March? He's not claiming this money for next 7 years. Then what am I supposed to do with that? Can I keep on showing this in my balance sheet? If yes, how? If not, then what to do? So there's a continuation of topic after this, but too much of discussion now will be too much of boring point. When the appropriate time comes, I'll discuss. What will I do with this money if it has not been claimed by the shareholders for a very long period? Can company keep that money forever with them? The answer is no. There's a procedure after this. This will be discussed in law as well. In accounting, wherever appropriate times comes, I'll be discussing that point. Am I loud and clear?
Yes, sir.
Have I answered your query, Kritin?
Yes.
Yes. Which chart? This one. Okay. Anyways, I'll be sharing the PDF.
So,
Can just take a photo of this if you want to do a revision. So now we'll take a quick break of 3 minutes. We'll come back and continue with the next question. Thank you. Yes, people. Welcome back from the break. So let's continue. So there's one question that was asked. in the chat box. Sir, if dividend is payable 4 times in a year, will 3 interim dividend be deducted this year and last one in the next year? Guys, as long as interim dividend is concerned, you give interim dividend every month, 12 interim dividend. You have the power to declare the dividend then and there. I am not under mercy of the shareholders. So I have the authority to declare the dividend. I have the authority to pass the entry. So all the interim dividend, let it be even 12 interim dividend, you will pass the entry then and there in that year and it will be deducted from that year's profit only. It is only final dividend which is getting deducted from the different year's profit. But interim dividend will always get subtracted from the respective year's profit. Another question was asked during the break, sir. After AGM is over, can we not sign the financial statement? Guys, please understand the purpose of AGM is to call the shareholder. In that, one of the agenda is to adopt the financial statement. Means what? Whatever the financial statement is signed, that signed financial statement is discussed in the AGM. I tell the shareholder that this is the profit of the year. So that profit cannot be uncertain profit. It has to be sure profit. Sure profit will come when only if the auditor, external auditor, independent auditor tells that this is the final profit. So in the AGM, I cannot call the shareholders and tell that this profit is subject to adjustment. I cannot tell it because in the AGM, as per the company law, we have to give them the signed report. Company law says that. So you cannot sign the financial statement after AGM. Company law does not permit. Hence, you have to sign the financial statement before AGM. Have I answered your query, Balaji? Okay. Now coming back, let's do illustration number 10, people. Please take 10th question, which is on page number 11.57. On 31st March 2001, SR Limited provided the following ledger balances after preparing the profit and loss account for the end of 31st March 21. Guys, this is a trial balance which is coming after preparing the P&L account. So my question goes to all of you. In this trial balance, will you be able to find revenue from operation? Other income? Expenses? No. Everything is all subsumed under one ledger called as statement of P&L. So statement of P&L balance will be reflecting in this trial balance and not the individual nominal accounts. Now they're given the debit column and the credit column. At the end, the total is given. So this is the Pakka trial balance given. But this is after preparing the P&L account. The first line says that equity share capital, which is fully paid of rupees 50 each, is how much? 80 lakh rupees. So how many share people? 80 lakh divided by 50 rupees per share. How much? 1 lakh 60,000 shares of 50 each. 80 lakh. Where will this go to? Share capital. Okay. Call scenario 15,000. What will I do? Minus it from share capital. Land at 25 lakh rupees will go to your property, plant, equipment. Building, PPE. Plant and machinery, PPE. Furniture fixtures, PPE. Okay. Security premium. Very good. Reserves and surplus. Security premium is nothing but it's a reserve. Is it a free reserve or a non-free reserve? It's a non-free reserve. Okay. General reserve. Reserves and surplus. Free or non-free? It's free. This is non-free. Profit and loss account. Reserves and surplus. What is another name of profit and loss account? Retained earning. Another name. Undistributed profit. Another name. Surplus. Okay. Loan from Public Finance Corporation. Loan from wait. Let me read. Secured by hypothecation of land. So I'm putting a star mark here because I have to give a disclosure. They've not mentioned this long term or short term. So if they've not mentioned here, I'll go and check one more place, which is additional information. In that, they'll tell you this is long term or short term. Nothing mentioned there also means it is long term. So as of now, I'm putting this long term borrowing, but we'll see what is the notes trying to say. Other long term loans. Look at the word long term loans itself. He's telling long term loans. He's telling. So it is long term borrowing only. Long term loan, nothing but borrowing. Long term borrowing. Short term borrowing is 460. Short term borrowing. Inventories, finished goods and raw material. Both are inventories. Trade receivable. Trade receivable. Advances short term. Short term loans and advances. Trade payable. Trade payable. Provision for tax. Short-term provision. Unpaid dividend. In the current year, the dividend is declared. We made the payment, but the payment did not go through. So payment did not happen. It's unpaid dividend. Other current liabilities. Cash in hand. Cash and cash equivalent. Balance with bank. Cash and cash equivalent. Balance sheet looks very friendly. Because everything we know. Correct, no, Kritik? Yes. Now, the following additional information was also provided in the respect of the above balances. First point, 50,000 fully paid equity shares were allotted as consideration for land. So this is non-cash consideration. So I have to give this as a disclosure requirement. So I'm putting a star mark here. I'm putting a star mark here. Any problem? No problem, sir. Next, the cost of the asset is given, which means the value of the building, plant, machinery, and the furniture, which is there in the trial balance, is at WDV. It is at WDV, means which is coming after minusing depreciation. So what method of accounting depreciation have they followed? Normal method of accounting depreciation. So what entry they would have recorded? Depreciation to building, depreciation to plant and machinery, depreciation to furniture. So this is gross block. Net block is given in the trial balance. If I take the difference, I'll get the depreciation. Which depreciation? Accumulated depreciation, not the current day depreciation. I'll get the accumulated depreciation. Okay. So coming to land, building, plant, machinery, furniture, which you see for land, it's an appreciable asset. So the block which is given at 25 lakh, gross net both will be same for land. Whereas for building, plant, machinery, furniture, the gross and net block will be different. Next, trade receivables of 4,86,000 due for more than 6 months. So aging we have to do. So where it is? Trade receivable. Where? Here. Total is 17,50,000. In that they're telling that 4,86,000 is due for more than 6 months. 4,86,000. So which means this is due but not paid. So I have to show this in aging. So what is the remaining amount? 12,64,000. So this will be given as aging. Chalo, great. Balance with bank include 56,000 of the Naya bank, which is not a scheduled bank. Okay. It's a non-scheduled bank. So which is 56,000. Where is it? Cash at bank. 56,000 is non-scheduled bank. What is the balance? 3 lakh? 58,000 is the scheduled bank balance. Very good. So far, any difficulty? Easy. Okay. Loan from Public Finance Corporation. Loan from Public Finance Corporation repayable after 3 years. After 3 years means it will be definitely after the benchmark date. So this is going to be long-term borrowing. So here they have given the information. Loan from Public Finance Corporation, which is secured by way of hypothecation. This 26,30,000 is repayable after 3 years, beyond the benchmark date. So this is my long-term borrowing. Pakka confirm now. Now tell me any problem. Okay. So far easy.
Yes, sir.
Yes. Online people, so far easy.
Yes, sir.
Online people, so far easy.
Yes, sir.
Sixth one. The
Yes,
balance of rupees 26,30,000. The balance of rupees 26,30,000 in the loan account with Public Finance Corporation means here. We are talking about the fifth point. Is inclusive of 1,34,000 of interest accrued but not due. This loan is secured by way of hypothecation of land. This information is already given in trial balance. Second time they're giving this information to confuse us. Okay. So now guys, coming to this. Loan from Public Finance Corporation. Total how much it is there? I'm putting a star mark here. I'm giving a 3 breakup here. So why 3 breakup? They're telling that the balance of 26,30,000 in the loan account of Public Finance Corporation. So in the Public Finance Corporation, there's one particular balance of 26,30,000. In that, 134 is of interest accrued but not due. 1,34,000 is interest accrued but not due, which is nothing but your other current liability. The balance of 26,30,000 is having is 134. So from this 26,30,000, if I minus 134, how much it will be? 24 lakh 24 lakh 96,000. Tell me what is the balance?
25 lakh 26,000. 25 lakh 26,000.
Sorry, the total balance is 2630 only, no? Okay, sorry. Total is 26 lakh 30,000. In that 1 lakh 34,000 is interest accrued but not due. It goes to your other current liability. So balance is 24 lakh 96,000 goes to your long-term borrowing. Simple, same like last question. Same like last question. No change. Online people, any problem so far?
No, sir.
In this 26 lakh 30,000 rupees, which is the loan from the Public Finance Corporation, in that 26 lakh 30,000, 134 is your interest accrued but not due, which is your other current liabilities. Balance is 24 lakh 96,000, automatically becomes your long-term borrowing. Chalo, great. Coming down, 7th point. There's an item called as other long-term loan, which is unsecured detailing. This includes 13 lakh 80,000 loan taken from what is it? Nixis Banker. Whatever you feel like, you decide. 13 lakh 80,000 is loan taken from Nixis Bank. Amount repayable within 1 year is 480. This is given in bracket. Which is in continuation of the previous point. Which means out of 13 lakh 80,000 loan what I've taken, which is unsecured loan, 4 lakh 80,000 rupees I have to pay within 1 year. So what is this? Current maturities of long-term debt. And loan taken from that is 8 lakh 50,000 rupees. Now what do? I'll come to the whiteboard. I'll draw one chart here. So you have to tell me what is the total long-term loan unsecured. Other long-term loan 22 lakh 50,000 rupees is the total value. 22 lakh 50,000. lakh 50,000. Now the question says that in this one portion is of 13 lakh 80,000 loan taken from Nexus Bank. So one part of this. How much it is? 13 lakh 80,000. Okay. Now in this 4 lakh 80,000 has to be paid in next 1 year. To be paid in next 1 year. How much it is? 4 lakh 80,000. Means any amount that I'm going to pay next 1 year is my current liability. Where will come under current liability? Short-term borrowing. Where the short-term borrowing? Current maturities of long-term debt. So now this 480 will be classified under current liability. Where the current liability? Short-term borrowing. Where in the short-term borrowing? Current maturities of long-term debt. What is this? In detail, we have discussed in the first 2-3 classes. From 1385 minus 480, what is the balance? 9 lakh rupees. This balance 9 lakh rupees, have they given any information when to be paid? No. So definitely I'm going to pay this money beyond the benchmark date. So this is my long-term borrowing. Any problem? Online people, any problem?
No, sir.
Now, the question further says that loan taken from director is how much? 850. Loan taken from directors. Director loan is how much? 8 lakh 50,000 rupees. And this is being classified under long-term loan. Now you don't say so director is a related party. You said related party means it will come under short-term borrowing. Donkey fellow. This guy is clearly telling this is a long-term. Means from this director you have taken loan from long-term purpose. When did I say director's loan or related party's loan will be short-term? And the question is silent. But here they have very clearly told this is a part of your long-term loan. So this will go where? Under long-term borrowing only. Is there any balance amount? 20,000 is the balance amount. Have they told you what is this amount? From whom have we taken the loan? Nothing mentioned. So this will be called as others. And this entire 22,50,000 is unsecured. Now listen to me very carefully. Listen, don't do anything. Out of this 22,50,000 rupees, 9 lakh rupees is long-term borrowing as loan from Nexus Bank. 8,50,000 is long-term borrowing as director's loan. And 20,000 rupees is long-term borrowing from others. Whereas this 480 will be a part of your short-term borrowing under current maturities of long-term debt. Understood the classification now? Online people, do you have any difficulty in digesting this chart? Very, 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 very important.
No, sir. No, sir.
Anybody needs Hajmola for digesting? Digesting. No. Can I go to the next point? Okay. 1 second over. What meant? CA people saying 1 second. They don't know what is 1 second. If you want to read, at least you say us at 10 seconds. Huh? மனசாட்சி இல்லடா உனக்கு இதுக்கு என்னடா பண்ண போற 2 minutes ஆச்சு நீ draw this chart, very, very important for revision purposes. Done? You should not say yes. You should say done, 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 sir. Huh?
30 seconds wait.
I love your Amul baby சொல்லு இல்லையா எல்லா அமுல் பேபிஸ் மாதிரி பேசிட்டு இருக்காங்க very, very important. Please note it down. Sidhu, over. Online people, have you noted down?
Yes, sir.
Hello. Eighth one, bills receivable. Oh my God, sir, bill of exchange you're asking, you're sure. Where did you study this? 2 places. 11th standard, CA foundation. How many of you don't know bill of exchange properly? Bill of exchange. What did I say? CA enter. It's not accounting. It is advanced accounting. Can I sit and teach bill of exchange here? No, touch your heart and tell me. Is it possible to teach? That any people? Do you agree that the basic classes to be done is very important? Now the problem is that so should I skip this chapter, sir? What will you do with this? Tell me. Bills receivable for 160 maturing on 15 June 2001 has been discounted. என்ன பண்ணணும்? What is the treatment of this in the financial statement? You gave me the meaning. I don't want meaning. I want what is the treatment to be done in the financial statement as an auditor. They are not telling you that this bill receivable is to be discounted. You have to pass the adjustment entry for discount. They're not telling you. They're telling it is already been discounted. Means the entry is already passed. Entry, bank account debit, discounting charges account debit to bills receivable entry passed. Okay, Piyush is saying something which I don't understand, but let's try to understand from him after some time. Abhi, what should I do with this? This we already discussed in foundation. That's what Piyush said. Okay, Harini. Okay, others. Why it is contingent liability? அவன் கேக்குறான் நான் உங்ககிட்ட கேட்கலாம் Okay, so why it is a contingent liability? In case? Very good. I'm proud of you, Balaji. Now, rightly said by people. Listen, listen, listen. Papa. Here is our money. அவன் என்ன தட்டிட்டு இருக்கான் சம் போட்டு என்ன பண்ண போற இதான புரிஞ்சுக்கணும் அது எப்ப வேணா போட்டுக்கலாம் நான் ஃபீல் பண்ண கூடாது நீதான் ஃபீல் பண்ணணும் because you're going to miss the concept no love triangle company has sold goods worth 160 on credit company has sold goods worth 1,60,000 on credit what is journal entry sales okay debtor account debit to sales this is all not required but I'm just doing a small revision along with this goods that is being sent you'll send invoice along with the invoice you'll send the bill of exchange which the debtor has to sign and give it back so when the bill is signed and given back on the date of receipt of bill what is entry very good bills receivable account debit to debtor how much 160 then what happened we were in urgent need of money we means not we company was in urgent need of money because we were auditor no so company was in urgent need of money so what happened they took the advantage of the concept of discounting of bill so this bills receivable they gave it to bank tell the bank take this 1,60,000 worth of bill on a future date this debtor will pay you as of now you pay me the money bank is asking if I'm paying you the money now since you're enjoying my money in return what will you give me he's like you discount the interest and give me the balance money so let's suppose 1,60,000 rupees is the bill receivable given 1,000 rupees is discounting charges so how much money did we enjoy from the bank 159 so what is the entry going to be bank account debit discounting charges account debit to bills receivable how much 1,59,000 1,000 very good super now I have a feeling that you guys have properly passed CA foundation because answer is instantly coming very good so bills so here if you see debtor account is created here closed here bills receivable account is created here closed here everything is over this question is saying that only there's a bill receivable of 160 which is maturing 15 June that is after few months has been already discounted means what the company has already passed this entry and this entry everything is over now what am I supposed to do with this entry now listen to me very carefully I told you in the CA foundation that when the banker is taking the bills receivable when he's giving you 159 rupees that is 1,59,000 rupees he is making you sign one contract in that contract there is one point mentioned telling that on the due date what is the due date 15th of June on 15th of June if this debtor does not pay me 1,60,000 rupees I will take this 1,60,000 rupees from your bank account directly like that is mentioned a point to which you have signed also so you are giving a pre-approval to the banker that in the event of dishonorment of the bill by the debtor you are allowing the banker to withdraw this 160 from the bank because on the due date bank has to receive that 160 either from the debtor or from you that is the bank's responsibility now we are on which date 31st of March when is the bill maturing next financial year 15th of June correct as on this date there is a sword stuck on my throat what is that sword if this gentleman does not pay the money on 15th June banker will take this 160 from my bank account when on 15th of June so as of now on 31st March this 1,60,000 is not my liability it's not my liability but it may become my future liability when if the debtor does not pay me the money here So my liability is dependent on a future event. My liability is dependent on a future event. If the debtor pays, no liability. If debtor does not pay, I have to pay. So my liability is there, small portion of it, which is dependent on the debtor. So if any liability is dependent on a future event, happening or not happening of the future event, if it is dependent on that, then this become my contingent liability. So now I have to give a disclosure in the financial statement, where in notes to accounts. After you prepare all the notes, no, balance sheet, equity, liability, asset, P&L, after you prepare all the notes, at the end, you'll give an extra note called as contingent liability. In that, you have to mention that there is a bills receivable of 160 as a contingent liability. Means what? If the debtor does not pay the money to the banker on 15th of June, I may have to pay as a company, I may have to pay this money. If at all he does not pay, like that, I have to give a disclosure to my users of the financial statement. Those 7 people for whom we are preparing the financial statement, no, to that fellow we have to disclose that if that person does not pay the money, I may have to pay the money. So this becomes your contingent liability. So far I give you 3 examples of contingent liability. One is dividend, second is that court case, third is this bills of exchange. So these 3 are the examples of contingent liability. But the reason why I'm explaining all this is, see, one is in this practical question, you have to give a disclosure. Second part, your MCQ is there, no, for 30 marks. There's no negative marking. So a lot of people think that, okay, inky pinky ponky, father had a donkey, 30 marks, I'll get like that. No. The MCQ question, what they're going to shoot at you is going to be so close. The answers are going to be so close. If you're not clear with the concept, means 100% if you're not clear with the concept, you cannot crack the MCQs. That is why every place here and there I'm giving the conceptual understanding. 70 mark descriptive paper, you still manage. 30 mark MCQ. If you get the concepts right, that 30 mark will work in your favor, or else it will go against you. And 30 mark question, if you see at least 10 to 12 mark questions are conceptual driven. It will be so close conceptually, they will not be able to crack it unless until you know the concept very well. Am I loud and clear? That is the reason each and every point conceptual I'm trying to explain one more time. So this will be my disclosure as contingent liability. Do you have any problem in this? No problem. Wonderful. Short-term borrowing includes loan from Naya Bank, 1,16,000, and this is secured. Means I have to give disclosure for secured separately, unsecured separately. And loan from director, 48,000. Both put together how much? 1 lakh? 64,000. How much is the total short-term borrowing?
4,60,000.
4,60,000 rupees. So which means for this also you have to prepare a chart. So 4,60,000 rupees. In that, secured portion, unsecured portion. How much is secured portion? 1,16,000. That is a loan from Naya Bank. One lakh 16,000. In unsecured, I have two parts. One is loan from director 48,000. Loan from director 48,000. And loan from others balance. How do I get it? Sir, out of 460, if 116 is secured, so how much is unsecured? How much is unsecured? From 465 minus 116. 3 lakh 44,000. Total unsecured is 344. In that, if 48,000 is loan from director, how much is others? 2 lakh 96,000. So this is your balancing figure. Total short-term borrowing 4,60,000. This is secured, SECURED, secured. This is unsecured. Note on the chart, then we'll go to the question. Done? Next, transfer 35,000 to general reserve, which has been proposed by the board of directors out of the profit of the year. From the current year's profit, they want to transfer 35,000 to general reserve. So minus it from the P&L, add it to general reserve. No problem. So here in the GR, do we have any GR here? Here. So one star mark here, another star mark here. Inventory. Now this is a tricky point. Listen to me very carefully. Inventory of finished goods. Inventory of finished goods. Finished goods inventory. Finished goods includes loose tools costing 5 lakh, which does not meet definition of property, plant, equipment as per AS 10.
You just have to give the specification.
They're talking about loose tools. Yes. They're talking about loose tools. Sometimes this loose tools will go to inventory as per accounting standard 2, or it might go to property, plant, equipment as per AS 10. When does a loose tools go to property, plant, equipment? If that loose tool is specific to that particular asset. Otherwise, this loose tool is that part or component which can only specifically fit to this property, plant, equipment. It can fix to only one asset, not to any other asset. If it is specifically for that particular asset, then that loose tools will be a part of your PPE as per accounting standard 10, where you will depreciate that. But if I'm talking about any loose tools which I can fit in anywhere, I can fit that anywhere, I can use it for multiple places, machineries, then it qualifies the definition of inventory, and you have to disclose this under AS2 as inventory. Are you able to follow? Now the question says that this loose tools costing 5 lakh, it does not meet the definition of PPE, which means this is not a specific one, it is a general one. It is a general one. Apana, this 5 lakh should be going to your asset or should it be going to your inventory? It should go to your inventory. So this is currently included where? In the finished goods. Now schedule 3 says that, see, 5 lakh you're showing in finished goods. As per accounting standard 2, you're recording in inventory. I have no problem. But I want you to disclose this item separately outside finished goods. Which means what? Your total finished goods is how much?
45 lakhs.
Your finished goods 45 lakh, you're saying, no, this is wrong. In that actual finished goods is how much? 40 lakh, and loose tools is how much? 5 lakh. So schedule 3 says that showing the loose tools and inventory, I'm okay with it. As per AS2, you're showing this under inventory, I'm okay with it. But do not combine under finished goods. Show as a separate item called as loose tools. So now under inventory, we have how many categories? 3 categories. Finished goods, loose tools, and raw material. Am I loud and clear? Okay. Online people, am I loud and clear?
Yes, sir.
Yes, sir.
Now you are required to prepare the balance sheet of the company as on 31st March 2001 under part 1 schedule 3 of so and so. You are not required to give the previous year's figure. Thank you so much. Can I start? So please add heading SR Limited. SR Limited. Heading. Next heading will be balance sheet as at 31st March 2001. I am lucky, you are not lucky. You have to write it. I can do this painting work. Next point. Particulars, note, and figures at the end of the current period. Under that, equity and liability. Done. Under that, point number 1 is shareholders funds. Don't see the screen, you just visualize from your mind. Under that, share capital. Do we have to give any note for that? Yes. Note 1. Next is reserves and surplus. Any note should be given for that? Yes. Note 2. Any information about the share warrant? No, leave it. Any information about share application pending allotment? No, leave it. Next is non-current liability. Under that, what type of you see everything is long term only. There is no deferred tax liability. There is no other other long term liability. There is no long term provision. Only one item. Long term borrowing, and that is note number 3. Don't see the screen. As and when I'm dictating, please imagine, recollect, and write it. 3 is next is current liability. Current liability. First item is short term borrowings. Note 4. Because you have a breakup of short term borrowing, multiple breakups of short term borrowing. Next is trade payable. Trade payable, direct amount, there's no aging, so you can write it directly in the outer column. Next is other current liabilities. So which item of other current liability do we have? Unpaid dividend and interest accrued but not due. 2 items we have. Very good. Then short term provision, provision for tax. So total, how many notes so far? 6 notes. Short term provision in the ICAI book, every time they have done the notes. Even though there is a one item, they have the habit of doing it. For this alone, you can do the notes. So can we go to note 1, share capital? I don't think so. There is any information on authorized capital. So just write the heading authorized capital and leave it. Just write the heading authorized capital and leave it. First one is authorized capital. Second one is issued, subscribed, and called up capital. Under that, we have 1,60,000 equity shares of 50 each. Total how much?
80 lakhs.
80 lakh rupees. Here, as an auditor, what will you take care of? You have to take care of the disclosure requirement. What disclosure? There is shares issued for consideration other than cash. We've issued the share for consideration for what?
Land.
For buying the land. For purchasing the land, we have issued the shares as consideration. So you have to mention that point. Out of the above, 50,000 shares has been issued as consideration other than cash. Or you can mention for what purpose also. It's for purpose towards purchase of land. That also you can mention.
As consideration for land.
Issued for consideration other than cash towards purchase of land. Out of the above, 50,000 shares have been issued for consideration other than cash towards purchase of land. Because as a shareholder, I want to know you have issued this shares for what purposes. So to mention that it is towards the purchase of land. Online people, are you all with me?
Yes, sir.
Yes, sir.
From that, we have to minus calls in arrear 15,000. So balance is 79,85,000. So in the face of balance sheet, please write 79,85,000. Yes. Next is reserves and surplus. In the question, we have how many types of reserves and surplus? We have security premium, general reserve, and P&L. So first, security premium.
Not free reserve.
So we don't have any other premium to be added and subtracted. So that is security premium in the outer column, 15 lakh rupees. Guys, you don't have to give the disclosure of free or non-free reserve. Free and non-free, which I gave in the balance sheet only for our understanding. In the schedule 3, you need not give this is free and this is non-free. Just write under reserves and surplus. So first item that we'll record is security premium, directly 15 lakh in the outer column. First, write security premium. First, security premium. Second will be general reserve. General reserve, opening balance. 9,41,000. Add transferred from P&L account 35,000. Total 9,76,000. Second is general reserve. What happened? Opening balance of general reserve 941. Add transferred from P&L 35,000. So total 976 in the outer column. Third is current year surplus. Opening balance 580 less transfer to general reserve. Minus 35,000. So balance is 5,45,000. So GR and surplus will come in the inner column and the final amount in the outer column, and security premium directly in the outer column. So 30,21,000. Are you all getting? Please check. Are you all getting 30,21,000? Online people, there's no interaction from your end. So what do I understand? Listening, not listening, what is happening?
Listening, sir.
Others?
Understood, Listening, sir. sir.
Okay, wonderful. So 30,21,000 without forgetting, please record in the face of the balance sheet. Opposite to reserves and surplus item. Next is long-term borrowing. So come to the chart that we have prepared. Where's the chart? This is this one only, no? So first, let's talk about Public Finance Corporation. Loan from Public Finance Corporation, 24,96,000 is long-term borrowing, and they're telling it is secured. So now first category will be secured category. Under long-term borrowing, please write secured long-term borrowing. Correct, no? So long-term borrowing have two categories, secured and unsecured. मनीषा को मजा आ रहा है ना? ऐसे ऐसे होता है तो मेरे साथ. Under secured borrowing, this is a borrowing from Public Finance Corporation. So 26,30,000 have totally taken. That is showing under long-term borrowing. In that 134 is for interest accrued but not due. So I'll do the calculation here for you. What is note number? Note 3, long-term borrowing. Under that, the first item is secured term loan. Loan from Public Finance Corporation. How much? 26,30,000. Less interest accrued but not due. How much?
1,34,000.
1,34,000. So what is the total amount in the outer column? 24,96,000. Without forgetting, you have to mention here that this has been secured by hypothecation of land. Secured by hypothecation of land. Second is unsecured. In the unsecured part, we have under long term we have this 9 lakh, director's loan 85,000, others 20,000. So three component we have. Loan from Nexus Bank. Loan from Nexus Bank. How much is the total loan from Nexus Bank? 13 lakh 80,000. You have to show the disclosure separately. 13 lakh 80,000. In that, 4 lakh 80,000 is to be paid in next 1 year. So you have to show less current maturities of long-term debt. How much? 4 lakh 80,000. So what is the balance? 9 lakh rupees. Sir, are we supposed to show this presentation? 100% yes, because I want to know as a user of financial statement how much total loan you have taken from Nexus Bank. In that, how much is long term and how much is short term. So this calculation you have to show. Next, B. So this part is taken care of. Next is director's loan, a loan from director. B point, loan from director.
3,50,000.
Directly in the outer column, 3 lakh 50,000. No, it is 850, da. 850, not 3. Within. Good morning. Others. Other loans. Other loans 20,000. Total 42 lakh 66,000. Online people, are you getting the same answer?
Yes, sir.
Okay, others. Presentation part, are you clear? In presentation part, if you have any doubt, please ask me. Long term borrowing 42 lakh 66,000. Next is short term borrowing. Short term borrowing. For short term borrowing also, there's a drama.
Yes, sir.
Where is it? Yes. In that secured. What is note number? Short term borrowing. Secured will be one heading. Under that, first one is loan from Naya Bank. How much is it?
1,16,000.
1,16,000. Only one is secured. Second item. Unsecured. We have in that two options, no? One is loan from directors, which is 48,000. And second is loan from others. Loan from others. How much it is? 2,96,000. Total put together
4,60,000.
4 lakh. Yes, one more thing is there. Current maturities of long term debt. You have to be very careful. Third one, under short term borrowing, current maturities of long term debt. Under that, the first item is loan from Nexus Bank. How much it is? 4 lakh 80,000. Very, very important. Dangerous fellow this person is. So how do you get a control? You come to your trial balance. Here, where is it? No, we're not classified here. Generally, what happens is here is there no other long-term loans. You should classify it here, so it becomes easy to mark. If not, in the notes, you have to keep a track of it. Yes. Short-term borrowing is how much total? 9 lakh 40,000. That is 1 lakh 16,000 plus 48,000 plus 296 plus 48. Total how much? 9 lakh 40,000. 9 lakh 40,000 short-term borrowing. Trade payable directly given in the trial balance. Where is it? Trade payable directly given 8 lakh 13,000. Other current liability, I had to give a breakup. There are two other current liability. One is interest accrued but not due. Second is unpaid dividend or dividend payable. So unpaid dividend is one other current liability, and then interest accrued but not due is another other current liability. What is happening, man? Right. Total is 2 lakh 4,000. Short-term provision is nothing but provision for tax, which is how much? 3 lakh 80,000 rupees. Total should be 1 crore 76 lakh 9,000. Please check if it is coming or not coming. Done? Now let's go to non-current assets. In non-current asset, we have only one item, which is PPE. Online people, are you all with me?
Yes, sir.
Note number 7. Present it the way I'm doing it now. Note 7. Property, plant, equipment. Particulars. Gross block, which means at cost. Accumulated depreciation. And then net block, which is at WDV. What is the first item? Land. So the one which I'm taking in the trial balance or from the trial balance should be the net block. So land net block is 25 lakh rupees. Gross also will be same, 25 lakh rupees only. Building 30 lakh rupees net block. 30 lakh rupees is the net block for building. Land and machinery net block is 24 lakh rupees. Net block is 24 lakh rupees. Furniture fixture, 13 lakh rupees. We're talking about 13 lakh net block only. Sir, where do you find the cost of building plant machinery furniture? It is given in the adjustment, additional information. So building, the cost of the building is 32 lakh rupees. So 32 lakh worth of building is now become 30 lakh. So there's a what do you call it? Fall in the value of the asset, and that is because of depreciation. How much? 2 lakh rupees, which is the balancing figure. Plant and machinery, when you purchase the actual plant and machinery, cost of purchase is how much? 30 lakh rupees. Means this plant and machinery is purchased for 30 lakh rupees. Over a period of time, you kept on using it. And how much value you used it for? 6 lakh rupees. You have used the asset for 6 lakh rupees. So unused value of the asset is how much? 24 lakh rupees. Guys, 24 lakh rupees here means what? It is unused value of the asset. I'm yet to use 24 lakh worth of asset in the future. Furniture, when I purchased, the purchase cost of the furniture is how much? 16 lakh 50,000 rupees was the purchase cost of the asset. Now it has become 13 lakh rupees. Means how much worth of the asset I have used? 3 lakh 50,000 worth of furniture I have used. The wear and tear is done for 3 lakh 50,000 rupees. So unused value of the asset furniture is how much? 13 lakh rupees is the unused value of the asset. 92 lakh is the total. So net block represents the value of the asset which I am yet to use in the future. This is the presentation. Next is inventory, note number 8. Note 8, inventories. Finished goods. How much? 30. How much is my finished goods? 45 lakhs. So 45 lakh minus 5 lakh. So the outer column should be 40 lakhs. Then loose tools 5 lakh. Then raw material at the end. How much? 13 lakhs. In exam, I would suggest you to write raw material first, finished goods second, loose tools third. Total is 58 lakh rupees. Total is 58 lakh rupees.
Sir, can you show it like this? Like finished goods, those tools, and other finished goods.
Other finished goods.
Finished goods के अंदर those tools and then
No. Loose tools is separate item as per Schedule 3. Trade receivable 17 lakh 50,000. You have to give a disclosure separately for aging is beyond 6 months, is it?
Yes, sir.
Amount due for more than 6 months. Trade receivable outstanding for more than 6 months 486, and others which is not yet due is 12 lakh 64,000. Total is 1750. You don't have your calculator. Cash and cash equivalent. So one will be, first item will be cash in hand 70,000. Then second item is balance with bank. Under that, non-scheduled will be 56,000. Scheduled will be 358. Guys, always write cash in hand first, people. Second will be balance with bank. In that, with scheduled bank A, with other banks, non-scheduled banks B. First is cash in hand. Second is balance with bank. First is cash in hand. Second is balance with other banks. I mean balance with banks. Under balance with bank, first will be with scheduled bank so much, with other banks so much. Total bank balance is 414 and cash in hand is 70,000. Four lakh 84,000. Short-term loans advances, only one item is that you can write 375 directly in the outer column. 3,75,000. Without forgetting, at the end, there should be a note given for contingent liability. So here it should be note number 11. Note number 11. Heading should be contingent liability. So there is a contingent liability amounting to 1,60,000 towards bills receivable. You have to mention this is towards what? Chumma contingent liability 160 means what? For what purpose they are not mentioning? No. Disclosure is not proper. So it's a contingent liability amounting to 160 towards bills receivable. Like that you have to mention. So note number 11, contingent liability. Under that 1, 2, 3, each and every contingent liability to mention separately. So how many contingent liability have we discussed so far? 3. First is proposed dividend. The dividend that is being proposed by board of directors. Until it is approved in AGM, it is contingent. Second, case filed by customer or somebody on the company, and it is depend on the future judgment. So that amount you have to record as a contingent liability. Third is bills of exchange, which is bills receivable. So 3 contingent liability discussed so far. If you want to know more about contingent liability, provision and liability, I have already shared a video with all of you in the group, which I took in CA Foundation. So that video, if you want, I can share one more time. In that, I spent nearly about 2 hours to make you understand what is contingent liability, what is provision, and what is liability. So in detail, the explanation is there in that video. If you want, I can give the description of that video, the description link of that video in this video. Yes. No. The gross block of the land, I took it from the net block itself because land is an appreciable asset. So there's no depreciation on the land. So the net block is given where? The net block is given in the trial balance. In the trial balance, if you see land 25 lakh is given. So this is net block. And you know that land is a non-depreciable asset. So obviously the gross block will be same 25 lakh rupees. No. I took it from trial balance only. Yes, in case of land, since it is appreciable asset and not depreciable asset, the net block and gross block is always going to be the same. So here 25 lakh net block is given. Since depreciation is 0, gross block is also same 25 lakh rupees. Now tell me if you have any doubts. So you have spent more than 2.5 hours in doing only 2 questions. Correct? As per schedule, tomorrow there is no class. Am I right? In case if I meet at 5 o'clock, or let's say 4:30 to 6, because I had one more question target today that is missed. So for me, hand is itching. In case if you have a class tomorrow from 4:30 to, but 4:30 you have tax class tomorrow. Chalo, then we'll do one thing. No problem. Leave tomorrow. We'll continue on Thursday. Thursday, same 4:30 to 8, maybe 8:30. Okay, ma'am. Trend question தான் பண்ண இன்னைக்கு. You have to finish, no? Interview writing in Jan, not next Jan. Hello people, that's all. Let's wind up. All set? All in people? All set? Any doubts?
No, sir.
Sir.
Fantastic. So yes, people, that's all from my side for this session. I'll see you on Thursday, 4:30 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, thank you, thank you.